Yo, yo, yo. Welcome, everyone. Welcome to another show, another stream. I hope you're doing well. Hope you had a good Monday, Tuesday, and Wednesday, because today is Thursday. Let me know in the chat what you want me to look at on the charts, what you want me to break down. This week is a bit slower. There's not so much going on. There's not a lot of activity, but we're still going to try and analyze what we can do here in these markets. So the first thing that I always do, I look at financial juice. I look at the breaking news. Yes, I waste a lot of time on Twitter as well. So you can do that if you want to catch up on the news. If I'm being honest, most of the time, like 95% of the stuff on Twitter is complete crap and just brain rot. So I do sometimes stumble upon something interesting, but it's very rare. What I usually do is I have assembled a list. So on Twitter, I have assembled a list of people that I follow and that I really want to read from. So I focus on that. I find the best traders, the ones with an actual track record, and they're not faking or just trading sim accounts or demo accounts. And then I see what they post. They usually repost good stuff. They have original posts, and that can help you out. That can help you out to see what is the actual breaking news. Anyway, let's see financial juice. So let's take a look at this. First thing, market moving. The last one was Putin said to plan Ukraine escalation, seeing talks are fruitless. This is not really that important. US PC came in a bit higher than the forecast, but the same as the previous numbers, so a bit bullish for the US dollar, but if I'm being honest, it doesn't matter much. Now, when it comes to things like this, usually a leader of a country is not going to go ahead and announce an escalation on a press conference or on social media. If they're actually going to escalate, they're going to do it under the desk, okay? Because you don't want to alert the enemy if you're going to escalate things. So posts like this are meant to manipulate the markets or manipulate the press or manipulate someone, okay? If they really want to escalate, they will escalate without an announcement. So when the Russia invasion, when the Russian invasion of Ukraine was just starting out, Russia was assembling troops along the border, okay? Along the border, and that basically meant that they didn't announce an attack. They just kind of went and attacked, right? That's how it usually happens. So first we look at the market moving, then we look at the Forex. Let's see Forex. And I just focus on the stuff that is in red. If there's nothing that is highlighted in red, it's probably not important. Okay, let's scroll down a bit more. We got some BOJ stuff, but I don't think we got much. We got some Australian stuff. So I'm just gonna go through until the yesterday morning news. US stuff. We got the PC, of course. Let's go a bit lower. So, okay, we stopped here. Nothing much. Nothing is really highlighted in red. Nothing is really that important. If you look at the currency strength chart, which is a pretty cool chart that you can look at, as to sort of to see which currency is the hot one or which one is super bearish. So right now there's not much moving. I can see Aussie is climbing up, so Aussie is catching a bit of a bid, which is probably gonna be good. It's probably gonna be good for my Aussie dollar position. So this one is looking fine. It's continuing to appreciate to the upside. The news that did happen yesterday was Nvidia. So NVIDIA had earnings. If you open up this section in TradingView and you open up the lower one, you're going to see latest earnings report was yesterday, and the earnings came out better than expected, which you can also look at on the stock box. So if we open up the stock box, if we go to the financials, earnings report tracker, and NVIDIA. So is this it? I think it is. So Q3 is starting. What? Q3 2026? Okay. So these are the numbers basically. So 2.09 was the forecast, came in at 2.22. Yeah. So that's pretty much it. We're expecting a big gap to the upside. So we're expecting a big gap up. So the close yesterday, 209, 224 is supposed to be the open. Now this is the pre-market, so it's probably gonna be a bit lower than that, but a pretty bullish reaction. Now, if you study NVIDIA earnings, you would notice, just a second. So if you study NVIDIA earnings, you would notice that usually they may surprise or disappoint, but the market doesn't really go up even with great earnings. So the run up into the earnings is usually pretty bullish. And then the reaction after earnings, like a couple of days after earnings, is neutral, so flat on the price or even bearish. So what I'm expecting is probably a gap up like this, and then kind of flatter price action. And I can show you an interesting chart. So let me just open it up. It's in my email. So let's take a look. Here it is. And now let me just put this to here. Expand this back. Okay, so this is the chart the week after. Down days stay down. This is the average cumulative NVIDIA return in the 5 sessions after the earnings reaction, split by the direction of that reaction. So after an up earnings day, which we do have from yesterday, the reaction after 7 days is kind of muted. See the blue line? That's what you can see after earnings. After a down earnings day, so when the earnings are negative, the next 7 days are pretty bearish. So the trade would have been, if the earnings were bad, if the earnings disappointed, you could sell NVIDIA today, and there's a pretty good edge that NVIDIA will go lower. So now, because the earnings were a beat, because the earnings were a surprise to the upside, there's not really much you can do. Like, the price action is probably going to stay flat in the next few days. And again, if the earnings were negative, then you could have sold today on the open and you could have made some decent percentage. So that's the edge behind NVIDIA, behind trading NVIDIA earnings. I know Nick bought NVIDIA, I think, just before or a couple of days before the earnings. So he's probably going to be sitting in some pretty good profit, which is pretty nice. For me, when it comes to stocks, when it comes to individual stocks, if there's an earnings day, I just stay flat. I prefer to go flat into earnings. Also, that reminds me, I need to check for my positions, when are the next earnings. So for VLO, next earnings report, 56 days, PSNL, 75 days, BMNR, 85 days. Okay. So that's the big news, the NVIDIA stuff. Now, it did carry the SPY to the upside. So the SPX is up on the day, you can say, or better yet, let's look at just the SPY, which is the purest one. So SPY is supposed to gap up, and NVIDIA is such a huge part of the SPY and such a huge part of the Qs that, of course, it's going to gap up. The question is, will the gap get filled? So will the price go a bit lower, or will it actually continue up? Will it continue grinding to the upside? Now, again, looking at some research, usually after such a gap up, because of good earnings from NVIDIA, usually the market fills the gap. So usually the SPY is not as bullish as people think. Usually this happens, okay? So if we do gap up, it will mean that we are going to be above the 50, the 20, and the 10 EMA. And I can start to look for more stock breakouts. So I have a list assembled here. I have, I think, 20 stocks on here, which are setting up for a nice breakout. You have the pole, you have the flag, you have the consolidation, and I want to buy some breakouts. So if we do actually break out, I'll be looking to buy. So Shark Ninja is one that is pretty interesting. I think the fundamentals are pretty good with it. And I saw they have some new products coming out. So I do like a breakout on this company. Yeah, this is the list basically. So if the SPY opens up above the EMAs, it will give me a green light to look for breakouts on individual stocks. We're going to see what happens. I'll be sure to update you in my second segment. So I'm doing 2 segments per day, the initial one and the second one a bit later in the day. Another event that is happening this week is let's go back on the calendar here, Jackson Hole Symposium. That happens tomorrow. We also get the CAD GDP, but I don't think that's going to be that important. So I think we get the schedule for the Jackson Hole Symposium later today. Let's take a look. When will the schedule for the Jackson Hole Symposium come out? Because when the schedule comes out, it has the titles of the talks. So I think those titles can give you some good insights as to what will happen on the actual symposium. So the full agenda and schedule are released on Thursday, 8 a.m. p.m. EDT. In how many hours is that? I think it's probably in like 10 or 12 hours. So for me right now, it's 12:43. Okay, in 13 hours and 17 minutes. So it's probably going to be like very late my local time. But yeah, once the schedule is released, we should get some more insights as to what will happen on the actual symposium. I know a lot of people are looking at it. And if you look at this, where is it? This is it. This is what I wanted to show you. So if you look at this, this is the euro dollar on the Jackson Hole reaction day. By the way, this is a newsletter from Brent Donnelly, if you're wondering. So this gives you the reaction of EU. Now, the reactions in the past have been pretty big. Like 0.5% to 1% move, that's pretty big. If you go to euro dollar, and if we look at a 1% move, no, not the log scale. If you look at the 1% move, it's pretty big. It can be a decent size candle, probably a candle like this one, or like this one, or this one. So in the past, you got some forward guidance on these meetings. If I zoom in here, you're going to see, so for these years, this is what happened, policy outcomes. Sometimes the Fed signals hikes in the future. Sometimes they signal cuts in the future. Quantitative easing, quantitative tightening, you can see, so Bernanke signals quantitative easing too. Then you have Powell defends hikes, preemptive tightening. So the Jackson Hole Symposiums in the past have been pretty good to get some forward guidance. Now, the title of the current one is super boring. If you take a look, what is the title of this symposium? The title is pretty boring. It's like something, it's called Financial Innovation, Implications for Payments and Policy. So we also know Kevin Warsh, which is the current chairman of the Fed. He doesn't like to give out forward guidance, which is another reason why the whole event can be pretty boring and not market moving. So I'm pretty much waiting for like the CPI, the NFP, and the Fed, which is going to happen in September. That's what I'm personally waiting for. As far as the markets today, let's just briefly scroll through things. So gold is down, pulling back a bit. Personally, I'm looking for a bit of a deeper pullback, and I'll be happy to look for buy setups. The SPX, again, because of NVIDIA, it's probably going to gap up a bit. You have Bitcoin, which is holding up well. So crypto is holding up well. It's not really pulling back. It's starting to form probably kind of a bullish consolidation here before a potential breakout to the upside. So that's good to see. Crypto is starting to wake up, and you have oil, which is just elevated, not doing much. So oil staying inside the range, not really moving anywhere. We need a new catalyst. We need something to move these markets. I mean, if you let's say the calendar was super empty. Let's say you got nothing on the calendar, then the markets would probably just stay flat, unless there is some sort of breaking news. So you need something to move these markets. You need a new catalyst to create the volatility. Let's also take a look at the yields. So the 30-year yield is, it moved lower, but now it's bouncing back. The 10-year is just in this tight range here. See, this is the tight range. We're not really moving anywhere. We need a new catalyst. Market's pretty boring at the moment. As a trader, you cannot invent volatility. You have to hunt for it. You have to wait for it, right? Also, give me 1 second. I'll be back. We're back. Comments. Morning, Obasi. Can we focus on gold? No. Good morning and silver. Good day, gold. Please analyze gold. No gold, please let it run down. Bro, you aren't even reading the chart of your viewers, man. Well, I have my schedule. If you like it, great. If you don't like it, you can sign off. Prizrak, hello, welcome. NVIDIA missed earnings by a little. Missed earnings? I don't think they missed earnings. I can see a beat. Like, look at the estimate, look at the actual. Also, look at the pricing. NVIDIA. Massive gap up in percentage terms. Like 7%. It may be smaller once the market actually opens up, but this is pretty big. So, yeah. Good evening. If this guy doesn't talk about gold, in a minute, I'm switching off. So, I guess you switched off already. There's nothing to see on gold. It will retrace before another push. Yeah, nothing much. I mean, there's no sense in wasting words on this price action. We need a new level. Like, we need either new highs or we need it to hit the 200 SMA. At which point I'll probably get in on a buy position. Maybe like an initial stab long. Bearish coming. I think it will retrace as well. Good morning, King of Kings. It was my bad, Marco. I was asking if NVIDIA missed the earnings, but you clarified it. Thanks. Yeah, no worries. No problem. I do want to mention, if you guys want to join the A1 Trading Discord, you can join for free. Okay, so just a quick plug. Usually I do one of these per segment. On the screen, you have a QR code that you can scan to join the free Discord. You can also find the link in the description of the live stream. And you can also use the link which I'll post right now. So in the comments, you'll find it. Give me 1 second. It's there. Okay, so you can find the link to join the free Discord. If you want to become a paid member, or if you want to get the Edge Finder or the stock box, you can get 15% off. So 15% off with the code Marco. So that's for everything. For the premium A1 Trading Discord, for the Edge Finder, for the stock box. Stock box is a pretty new thing. So a new release from A1. It's constantly being updated. I use it on a daily basis for looking at stocks. So for refining and adding confluences to this list. And if you want to take a look, all of the info is in the description. But let's see if we can look at some currencies. The main thing that I trade is currencies. And what I want to do in the next few weeks, I want to get more exposure on dollar shorts. I want to sell the US dollar. And I want to look at some potential currencies to do that. So AU is a good one. I think USD CAD may be a good contender as well. I know the CAD had some bearish news because of the tariff announcement, but I still think this can give you a nice entry level here, especially as we're close to the 20 MA. If you look at the edge finder and we look at the heat maps, so let's see the heat maps. This is just for the short-term data. The current ones in the blue is the CAD, so that's pretty good. Nothing else pretty much. The dollar is in the red, which makes sense with the long-term thinking. So this is the short term. For the long term, what I usually do is I look at the GDP for Canada. It is starting to trickle lower. You got some negative prints in there as well. So the upcoming print, which is going to happen tomorrow at 14:30, will be pretty important if you're trading the CAD. Now, could we actually get Canada GDP print on Kalshi? Let's see if we can get that. Can't I see the actual percentage print? No, this is the whole 2026. Let's see. Canada GDP. Yeah, there's not much. What's here? What's the forecast? Forecast is for a bit of a lower print. So I'm guessing this is from Bloomberg or Reuters. So the forecast is still a positive print, but a lower one than the previous number. And the previous number, let's go. This is the month on month. There's no year on year here. Let me just go to the data. Let's see. I don't know what this is. It's a bit mixed up. Anyway, probably best to wait it out. Probably best to wait for this print to pass and then try and get in on an idea. So that's something that I'm considering. The unemployment rate is what I actually wanted to show you. So if you go to labor and you go to unemployment, you go to Canada, you can see it's starting to go lower. So it's starting to produce a rounding top, kind of rounding out above, right? And starting to trickle lower, which is pretty good. That's a good sign in my opinion. And inflation is not really a huge issue, but they may want to be CPI for the CAD. They may want to be a bit hawkish to lower it to 2%. Hawkish is, of course, bullish for the currency. Currently, the inflation is sitting at 3%. We can also look at the rate probability website. BOC, Bank of Canada. I mean, it's pretty hawkish. The pricing is pretty hawkish. Maybe not on the next meeting, but on the next couple of meetings, we could get a hike. Let's see. Probability of a hike or cut. Yeah, I guess in 2027 we should get some hikes. That's what the curve is saying, at least. So that's hawkish. Yeah. USD CAD, not a bad play. Like, I'm looking at other currencies. I'm looking at EU. I'm looking at GU. EU I don't like. We're going into the winter, and Europe is a big importer of energy for heating. Energy prices are elevated at the moment, so that can hurt Europe a bit. It can also hurt the euro as a currency. GU, also not my favorite. It's kind of stuck in a range there, while USD CAD is at least trending lower on this let's say shorter time frame. Well, you can say the same thing for GU. I apologize. Yeah, it's pretty much similar. So it's tough to find a good pair. It's tough to find the bullish currency at the moment. NZD USD, I wouldn't want to play that. I think too many hikes are priced in for the NZD. USD Swiss, no, not for me. USD Yen, I would like to short USD Yen, as I believe the yen will appreciate in the next few weeks or months. But holding a short position on USD JPY is very expensive. The swaps are really, really high. So because of that, not the best option. Not the best option. You can also do gold. If you're betting on a lower dollar, if you're betting on a debasement trade, gold is a good pick. Yeah, it is. Bitcoin, not bad as well. As the dollar loses value, as you get a debasement trade, Bitcoin does gain value on that. So that's not bad either. And those are kind of your options. That's about it. Let me see the DAX. Actually trickling up. FTSE trickling up as well, although cannot break to all-time highs really. So the DAX is starting to break out, but of course the best one is always going to be the SPY or the SPX. US is always going to be the best one if you're looking at equities. Like the DAX and the FTSE, there's just very bad price action overall. The volatility is pretty low, so yeah, not a great option. Marco, how are your evaluations going? So I made an update video on it. I passed phase 100K FTMO and I got some pretty good funding with Darwin X0. If you want to take a look, just search up my channel on YouTube, and it's one of the recent videos, okay? So Marco's trading journey, I made an update like 2 weeks ago. It shouldn't be hard to find. Do you think USD CAD will go up? I would say it's going to go down. It's following this short-term channel there. So I would say it's bearish, and I'm looking for sell setups, especially near the 20 EMA. Do I have a lot of confidence in it? I don't know. I preferred AU. I prefer the Aussie dollar. Ray Beast, hello. So Ray Beast, hello, not wello, but hello. Marco, my model passed evals, now funded. Awesome, amazing. Personally, I've been testing ChatGPT. It has been in like break even or a slight drawdown for I think 5 or 6 months now. So that's not going so well. I'm probably gonna stop testing it. It had a lot of success at the start, but then the SPY just went flat here and it wasn't good. Vincent, hello. CryptoMeat, what about USD Swiss? Okay, USD Swiss, the last thing I'm gonna do. And then I'll pass the stream to James. USD Swiss. So personally, like the Swiss could be the new funding currency. The yen, if it actually does gain value, the trade with selling or buying the dollar and selling the yen, positive carry, the carry trade, it is no longer valid if the yen gains a lot of value. So the new funding currency that has a low interest rate could be the Swiss. So the Swiss, if it's going to be the new funding currency, it's going to get sold, and that's not really bullish for the Swiss franc. So pairing the dollar, which I'm bearish on, and the Swiss franc, which I'm also kind of bearish on, not the best way to go in my opinion. That's why USD Swiss, in my opinion, is going to stay flat inside of this range. Not the best pick. That's about it. Thank you guys very much for watching. You can catch me again in 2 hours during my second segment. Don't go anywhere because I have James coming on, and yeah, good luck. See you in the next one.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello, ladies and gentlemen. Welcome to my segment of the stream. Hope you're all well. Ray Beast, congratulations on passing a funded account. Big deal. Nice one. Vincent, hello. Nvidia pumping. Yeah. Time to buy Nasdaq. Winchi Wei. I'm sorry, I probably butchered your name. Hello. King of Kings, good morning. Hope you're well. So, ladies and gentlemen, I am actually in a Nasdaq position. Sorry, not a Nasdaq position, a Nvidia position. So I'll be honest, like maybe 60% luck. I entered it yesterday because I'm not sure if you guys remember, if you were in my segment yesterday, we were talking about how I got the stock box like 2 days ago. I'm not a stock trader, but I'm trying to expand my horizons and just look at other markets and, new ways to make money. So I was actually looking at Netflix, but that was on a monthly time frame or a weekly time frame. A little bit too long term for me. It's not something I was that interested in, but I did see it pretty quickly. Then I saw Nvidia, and obviously Nvidia is a big thing. You know, everyone likes a bit of Nvidia. So went down to the H4, fib from the low to the high. Saw that there was a level of previous resistance here, just above this 50% retracement. We had the break above, retest into the moving averages, into the 50% retracement, and looking for this continuation higher, of course. Then we had, was it earnings come out? I'm not exactly sure exactly what happened, to be honest with you. Here. So earnings seem to have been quite positive. Again, I'm not a stock guy, so I'm not going to give you that much information here. But either way, positive developments for this market. So pre-market or the market open should be very positive, which is nice to see. So already made some money with the stock box, which is phenomenal. Anyway, we'll go back to FX because I don't really have anything else on the stock side to talk about. So dollar yen continues to run to the upside. We are very sluggishly continuing higher. There's really not much to say on this trade. I've been kind of reiterating the same point over and over again for the past couple of weeks, really, that I viewed the intervention movements or the intervention dip as just buying opportunities. I really didn't see any reason to be shorting that move. And the reason is because there's been no policy change. We've got absolutely nothing that warrants a short position, in my opinion, for the way I see the market. So we've got no regime change in terms of, obviously, we've still got that carry trade dynamic. During this, the move we had to this downside, again, nothing had changed since we had this. It was just a better price level to buy. So that's what I was doing. I was buying down here at the daily 200 moving average, and then just scaling in on some dips here. They are very, very small positions, by the way. So obviously managing risk there. Dollar Swiss is not looking so great, though, unfortunately. So the idea behind this one is still valid so far. So the entry was a little bit, in hindsight, a little bit too aggressive, I suppose. Although, at the time, we came up to the 50% retracement. We saw a rejection off, so that's why I took the entry. The reason I've not closed the trade is actually because it is still valid for the most part. So we've got the 250 moving average cross here, indicating that we've come out of this uptrend and we've now actually established a bearish trend with again, using the EMAs. We're still holding at or below the 61.8 fib level. We're still sort of retesting previous structure on the left. So technically speaking, it is still valid, barely, but it is there. And we do still have dollar Swiss here as the most bearish reading with -10. So the fundamentals are there. The technicals, again, are barely there, but they are there. So I'm going to hold the position until I'm stopped out because, that's why I got the stop loss there. My gold positions continue to run really, really well. Annoyingly so. It makes me sound a bit ungrateful to say that, I think, but the problem is, obviously, again, I've been saying over the past week or two that these positions I've got on gold are so small that I'm now in a position where I am on the long side. I'm making some money off it, but again, the positions are so small, it's kind of just a bit annoying. So now I really want to see some sort of pullback so I can actually get into a bit of a larger size position, increase my exposure to the metal side a little bit more, and actually make a bit of more money on this. So I think when it comes to gold and silver, I don't see any reason to be short, to be honest. I think, yes, we are due some pullbacks. I think this market is quite extended at the moment. It doesn't mean we're going to pull back today or tomorrow. It could be, it could be next week, could be in 2 weeks. I don't know. But I would say we are due for a pullback at some point. Obviously, we've had such a large move to the upside with pretty much nothing. We've had these sort. Would you call these pullbacks? I wouldn't really. I would more consider this a bit of a consolidation before just another pump higher, rather than it being a real pullback. So I would expect something a little bit larger before we do continue higher, but we'll see. I don't care. I'm already long, so we'll see. Nvidia, we did already discuss, and the Aussie US dollar. I'm still long on this one. It's running fantastically well, although I've trailed my stop loss to this low right here. So if we do end up seeing a little bit of a collapse later today, we do have the Jackson hole today, I think, in, was it 4 hours it starts? I think. I'm not 100% sure on the exact start time, but I'm like 99% sure it is today. So that could provide a little bit of volatility, or actually quite a lot of volatility to dollar-related things. So obviously the dollar, gold, equities, all sorts of different things. So that is something to be aware of. That could actually be quite a good catalyst for a pullback on gold and other markets as well. So either way, I've got a stop loss here. I do have a mental target here. There is no hard take profit on this trade, so I'm just going to let it run, see what happens. If I'm stopped out with a trailing stop, great. I'll book about 2% profit. If it continues higher, even better. Good stuff. But yeah, that's it in terms of my open position. So let me catch up with the chat and have a sip of coffee, and then we'll go back to the charts. Vincent, that's exactly what I said yesterday. It is like a new toy. Just have to have a go, don't you? Tony, good to see you, my dude. Hope you're well. Congratulations on the first stock trade. Yeah. Well, the thing is, King of Kings, I'm now contemplating. When you get when you see new traders, they'll come into the markets in the first week and be like, oh, this is easy. It's so simple. They just win and they win and they win, and then that beginner's luck runs out. It might be a bit of that. We'll see. I'm not gonna put too much weight on this. But yeah, we'll see. Hi James. Remember my Visa long exploded. Also, Bill Ackman bullish on Visa. Is it? What is the thing for Visa? Oh, it's just V, isn't it? That's it. I knew it was something short. It is doing really well. Again, just because I'm taking a stock trade, I'm not going to sit here and pretend that I understand them. I really don't. So as always, the best I can really give you is the technical side. I mean, we could always now go to the stock box and see what's going on with Visa. So that's always a plus. But again, in terms of the actual, fundamentals behind individual stocks, don't bother asking me because I'm not there yet in my stock education. Okay, so I mean, we're getting a bullish read on Visa, Raby. So I mean, based on just that, I think being long makes a lot of sense already by default. The financial metrics undervalued on forwards PE, fairly valued. I mean, again, I don't even know what TTM means. I don't know. So again, I'm not going to sit here and try and lop on stocks. So we'll move back to FX. But Ray, I'm glad you made some money. So capital rotation. I'll be honest, Dim, that is a poorly named widget on my part. So the idea behind that is to see the improvement, weakening, lagging, and strengthening currencies or assets. the name is a bit misleading because it says capital rotation. The thing is, it measures the score and it measures the macro environment, not price. So I do need to rename it because I've had a few questions exactly like that. But again, I'm not here to talk about that platform. So excuse me, feel free to submit a ticket. I'll get back to you on that. Anyway, Euro dollar is also looking absolutely fantastic. We're seeing a pretty nice pullback here. So this is one trade I have been waiting for some sort of entry. So I was shorting, where was I short? I think I was short around, oops, where's my pen? Oh yeah, here. I was short somewhere around here. Now, obviously that didn't work out at all. This was a complete failure of a position, straight to stop loss. But now we've got a really solid edge finder reading, and it's been very consistent actually on the euro dollar. Let me pull it up here. So we can see when it loads, the score over time is just perfect, really. I mean, it's been bullish for what, almost a month. So when we've got a very consistent longer term reading in one direction on an asset on the edge finder, to me, the way I view this is it's just a more solidified trade. It means the fundamentals are more grounded, and yeah, it's just a more consistent, meaningful score rather than it just being, you know, one or an immediate flip to bullish or bearish. Now, what we see on the actual sort of composite of the score, it's not great for like what I want to see. It's still enough. I would still take the trade, but it's just not great. So the technical signal's bullish, but again, as I always say, this isn't something I pay that much attention to because I follow my own technicals. I do the trend myself. COT, that's great. That's fine. Okay, cool. Retail sentiment, I also don't really care, but it's in favor, so it's good, but it's not a huge driving factor for whether I will or won't take a trade. What I really like to see is the three pillars down here. So we've got economic growth, the jobs market or labor market, and inflation. Only one of these has actually got any score. So, you know, we've got positive growth, jobs and inflation are completely neutral here. So this is what I mean by it's just not great for, again, for the way I trade. I'm a fundamental trader, not a sentiment trader. So these two up here are sentiment readings. That's, again, good for a bit of a icing on the cake, in my opinion. But I really need to see the three of these begin to actually do something and really bolster the market in a fundamental way, if that makes sense. So, as I said, I would still be willing to take a position here, but it's not perfect in terms of the setup or the makeup of the trade. So we've got the fib from the low to the high, pull back into the 50% retracement, slightly lining up here with previous structure. You can see previous resistance over here, turn support, resistance again over here, support, resistance. So we've had the break, very clean. Retest it again into that 50%, and they're looking for a continuation higher, potentially towards 1.2. We'll see if that happens. I'm not too sure. But one of the markets I do really like at the minute is silver. Yeah, okay, hold on. I was just making sure I've got my timeframes correct. So yeah, I think silver's really good, but I made a video this morning on my YouTube channel talking about some different trade ideas, and silver was one of them. One of the things I was saying was the fib here looks great. You know, we've got the fib from the low to the high. We've got previous structure on the left. This is more sort of talking about the daily time frame. So a break and retest of this level actually seems quite attractive. The downside is, though, we've actually already had the break and we've had the retest here. So this might mean on a technical side, I actually have to modify this trade and put the fib at this low here to this high. And then what that gives us is the new fib zone that lines up with the minor highs here on the H4. So I think there are two ways to approach silver, and it might be a case of actually having to take two attempts. In my case, you know, if I execute exactly like this. So if this trade doesn't work out, because it's quite thin in terms of the margin for error. So if this trade doesn't work out, then of course I might have to pull out the second fib, which was the one we had initially, somewhere like this, and enter on this 50%. So we'll see. But as things stand right now, I actually think this is probably the more favorable idea. And what we do see as well is actually silver, I think is at the top or one of the top? Yes. So silver is the most bullish reading here with a score of 10. So I would say silver is probably the best, and again, not financial advice as always, but in my opinion, I would say silver is probably the best market to go for at the moment. Okay. Visa is the only stock I've not had a single loss from the start of the year. Ray Beast, very good. Maybe you need to be a Visa trader then. GPJPY, what's my thoughts? Yeah, we can have a look at pound yen. Got my £15 on Nvidia, getting GTA 6 for free, or we'll put it back into stocks to make more. Oh, I see. Okay, so you put £15 into Nvidia to pay for GTA 6. Fair enough. What on earth do you trade GPJPY, bro? Are you market maker? What does that even mean? I have no idea what that question means. Mega Danger, good to see you, my dude. Hope you're well. Happy, what is it? Thursday. Happy Thursday to you. Okay, so pound yen was actually quite bullish on the edge finder. Is it still there though? It is, but it's really dropped off. So pound yen, I think, was a lot higher than it was. I can't bring the exact score, but it's lost quite a bit. Now, that doesn't matter to me because I don't really care too much about the fundamental score when it comes to the yen pairs. Now, pound yen is slightly different. You know, I'm talking actually at the moment more about dollar yen. The reason pound yen is slightly different is just because we've already corrected pretty much all of this intervention move and we're pretty much back to the previous highs. So I would say the risk reward aspect here just isn't really favorable. So if we were, let's hypothetically say, wanted to buy here with a stop loss at the previous low, somewhere around there, targeting the previous high, you could maybe get a 1 to 1.5, something like that. It's not amazing. But, and the big but here is, dollar yen isn't back to 160 or 164, which is the two sort of intervention levels on dollar yen. So I wouldn't be expecting an intervention specifically at the moment. It's more just a price action concern I've got around these highs. So yeah, I do think being a buyer is probably the most favorable thing to do. But in terms of the actual setup here, I don't really like it. I just think these pullbacks are a little bit too shallow to warrant anything. And of course, I'm talking about the way I trade with fibs and moving averages. If you trade differently, obviously apply that to your own strategy. But the carry trade is still completely alive with these yen pairs. So yeah, I've got no concern in terms of direction. It's more just the timing and obviously trying to get a decent entry. Thoth on BTC. Have you got a Lisp? You typing out a Lisp? Yeah, we can take a look at Bitcoin. I'm short gold at 46.85 and 46.40 last night. Took some good partials. Okay, interesting. Ray, do you scalp gold then? And if you do you do it on futures? Because I do a little bit of futures, and I only recently started doing futures, really, like since the start of this year. And it's just so much better, especially if you're trading gold. You would obviously just trade MGC or GC. But yeah, for scalping, it just seems like a no-brainer to go with futures, really, unless you're scalping FX pairs. Pound yen is one of the hardest crosses. I don't know. I wouldn't say there is a hardest or an easiest. I would say it really comes down to your strategy. You know, there's people that only trade pound yen or people that only trade gold, and there'll be other people that hate, hate those markets and say they're really hard. All comes down to the way you trade. For you, I trade all currencies. Oh, you got £15 profit. Okay, I see. Well, congratulations on your profit. I'm not sure that's enough. Yeah, I'm not sure that's enough to pay for GTA 6, but you're almost there. Maybe do another 5x. No, wait, hold on. Yeah, maybe another 3 to 4x and you'll be there. BOJ spoke hawkish last night. Doesn't matter. The way I see it, I will get back to Bitcoin, by the way, but the way I see the yen or yen pair specifically at the moment is it doesn't matter. Even if the BOJ hikes rates, they need to be very cautious. They can't hike too aggressively. They can't hike too much. So it's really a case of, okay, well, if they hike, yes, some of the carry advantage will be wiped away a bit, but that advantage is still there. You know, the yield gap is still in play. The carry trade dynamic is still fundamentally in play as well. So does it play an effect? Not really. I wouldn't say so. So until we do get some real policy change, and you know, for example, if the Fed started cutting rates and the BOJ committed to further rate normalization, then yes, I would say obviously then we need to start exiting and possibly even going short. Until we get some dynamic like that, I don't really see a problem. Okay, so Bitcoin, what do we have going on here? It's tricky because it does look quite good to be a buyer, just not right now. So the way I'm seeing Bitcoin at the moment, we've got the H4 down here. there's obviously flipped bullish with the moving averages. The weekly does remain bullish. It's been bullish, even regardless of the drop we've had recently. The monthly is obviously still quite bullish. The daily, however, is kind of where I'm paying attention at the moment. We're still in, again, technically speaking, with moving averages, we are still in this bearish trend with the 200 above the 50. That's a little bit of a warning sign. But what I quite like actually about Bitcoin at the moment is this double top that we've formed. The fact we've broken above the 200 daily moving average. We've cleared out sort of this pattern here. We were failing to break above this 200. And again, we have done it now. So that's quite a good bullish sign for us. So if I was looking to be a buyer, I would be taking the fib from the low to the high here and looking for some sort of pullback. So actually, I don't really like this. There's just nothing within this fib zone to really support it. I probably wouldn't go for this. So maybe something more along these lines. So if we took it from the very low down here to the high, the 61.8% level here lines up with the previous highs. This could be a really nice break and retest idea to continuation higher. So I think there's a few different approaches to be a buyer, but I would say it's imperative to wait for a pullback. I would not be buying Bitcoin right here. Again, we are buying into a double top on the daily time frame. We are technically still bearish. We've got a lot of left side candles here to see a potential correction. So yeah, I would say longer term, maybe being a buyer is quite good. But I would say right now, probably just foot off the gas and have a bit of patience. You love pound yen? I've got to say, actually, I do understand where the comment comes from. The pound yen is the hardest pair. As some of you may know, I have a very bad relationship with the yen. It's something I just can never really get right. And it's funny, really, because it's such a simple market. All you really have to do is buy the dips. But as you know, I think I said this like a week or two ago. I bought dollar yen right here, or somewhere around here. It might have even been down here somewhere. It was in a little bit of profit anyway. The actual entry isn't the point here. But I was shorting dollar yen at 160, looking for the intervention like we saw, the previous times. That was a fine. It was like a historical, statistical type trade. It was cool. Small risk, no problem. It obviously didn't work out because dollar yen kept going higher. We then saw this consolidation. I was sat saying, I don't want to trade dollar yen because it's consolidating. We've broken 160. I do think an intervention's coming. Anyway, we ended up breaking the range. I'm fairly sure dollar yen was bullish on the edge finder as well. And I was like, you know what? I'm going to pull the trigger. I'm going to go for it because I've been sat out and I've missed this whole move by just being so cautious. So I'll go for it. The day after I enter the position, that's when the intervention comes. And it's one of those things I couldn't really do anything about it. But it just sums up the relationship I've got with the yen. And it's not the first time something like that's happened. I think it was 2024. I lost quite a lot of money trying to trade the yen as well. It was a really bad situation. But yeah, anyway, we'll move on. What's up, James? Any thoughts on Euro New Zealand? Not initially, but yeah, we can take a look. Say less going to do 1,000 leverage. That's the way. If you're not doing 1,000 leverage on your life savings at least once a month, you're not really a trader, are you? Thanks, no problem at all. That's what I'm here for. There's a lovely parallel channel on gold, and my reason for taking those shorts plus Elliott wave counts. Okay, fair enough, Mega. You're not alone. I hate the yen. Seems like every time I'm in the BOG does an intervention. Yeah, I don't even know what the word is. It's just typical. It's just the way life goes. Okay, right, Mega. I'll take a look at that in a second. We'll just do Euro New Zealand for who asked for that? Ace 4 high. Okay. Okay, so initially we don't have anything on the edge finder. So let's just do a quick look at its scorecard here. Yeah, so it's a score of 2. So retail is a majority long. So actually, oh yeah, crowd is bullish. So yeah, we want to be leaning short side. Obviously, it's a contrarian view. Technical is bearish, not a huge deal. Economic growth is bullish. And actually, this is a good example. Do you remember earlier when I was saying about euro dollar and the 3 pillars? This is a good example because we've got basically the same thing here. So if you go and check euro dollar versus euro New Zealand on the scorecards, the actual fundamental data is pretty much the same. We had jobs neutral, inflation neutral, economic growth was bullish. That's exactly what we've got here on Euro New Zealand. The only difference is the sentiment readings just aren't there. So that's kind of the reason why when we've got fundamental data there, I view the trade as just a much more high quality position. I don't know if that makes sense. This might just be a personal view, but that's the way I use the Edge Finder if anyone's curious. Anyway, back to Euro New Zealand specifically, I don't really want to do anything here, again, just because there's no direction. There's nothing to drive it bullish or bearish really at all in my view here. So on a technical side, weekly is bullish. Monthly has actually flipped bullish here as well. H4, I'm not seeing anything. So what's the daily doing? Let's see. Yeah, so the daily is kind of just stuck in a wedge. I don't see anything here. So I think we've discussed this previously, actually. And the way I would approach this, just from a technical view, I don't trade patterns, but in this case, I would be looking for a move lower, retest of these lows, and then a continuation. Now, I'm fairly sure that when we have I think this is called a descending wedge, we often do see like the expected reaction off of that type of pattern is a break of the support or the resistance if it's ascending wedge. So that's kind of, or this is what I would be looking for. But again, it's not something I would ever take in a million years. I don't like this at all. Okay, so Mega, what do you want me to do? So you want to go to gold and you're saying something about waves. Start a line from the bottom of the 17th July around 39 and connect all the highs since then. Okay. How do I do that? Well, like this. Should we do that one? So when did you say it was? 17th of July. I suppose I should probably drop down timeframes if we're going to be doing this. Bear with me for a second. Let me just figure this out. So it would be here or here somewhere. I'm going to assume here, connect the highs or like this. I don't know what you're talking about. Anyway, Mega, I don't think we've got time to be trying to draw lines, but I will take your word for it. We have got about half an hour left. So maybe, Mega, we can revisit towards the end of the stream. Let me just go through the charts and things first. Everybody on the same page? Yeah, it does seem so. Are you expecting euro dollar to go bullish after this pullback? That's my base case, but I'm not overly convinced, to be honest with you. I think, very simply speaking, yes, the edge finder's bullish. We've got higher lows here, higher highs. So this would, again, be sort of, not just a break and retest, but also a higher low on the fib zone, looking for that continuation. Very simple setup. So based on, again, sort of the surface level things, yes. But again, as I mentioned, I don't really like the components that are making up the euro dollar bullish reading, because it's just not, in my view, it's just not great. It's mainly on the trend sentiment side rather than it be a fundamental thing. Yes, you can send me a screenshot. You could send it on, what could you say? I don't really know. I suppose you can send it on Twitter. It's probably the easiest thing to do. It's just elite traders _IO. Okay, so what are we doing here? I'm a bit happy that I'm not alone. Yeah, it always makes things feel a bit better when you're not on your own, especially when you're taking some losses. Are we expecting gold to crash? No, that's a ridiculous thing to say. With all due respect, no, I don't think gold crashing is a likely outcome. In fairness, it's absolutely possible. Anything in theory is possible, but it doesn't seem like a likely outcome. So I think really the only thing we can do with gold is actually just wait for pullbacks, fib from the high to the, fib from the low to the highs, or, from the bottom of the range. It depends what time frame you're trading, but I would be approaching it like this. Rather than trying to sell it, I would be looking to buy dips. But that's because I'm a swing trader and a macro trader. If you're, a scalper, a day trader, something like that, you might want to go short looking for a bit of a mean reversion or a fair value type trade. Again, that's not how I trade. I'm not here to try and give you any setups on that. If you promise to do it, I'll take a look. Yeah, I'm happy to put it on the screen. Excuse me. My instinct saying Trump will do something and USD will spike up and gold will crash. The problem is that's just instinct. You know, as traders, we've got to look at things logically and based on evidence and data. I don't have any evidence or data for that. The only thing I could really imagine doing that, specifically with Trump, is obviously a massive escalation with the Middle East. But even then, really depends on exactly what it is. But that would be a buying opportunity of a lifetime. It would absolutely, yeah. If gold for some reason, let's say, crashed down to 2,000 or 3,500, 3,000, wherever it may be, oh, trust me, that will be getting bought up like crazy. I would imagine, obviously, it depends on the severity of things. But yeah, I would say, generally speaking, it would never go down to something like 2,000 just because there would be so many buyers trying to buy just to get it on a huge, huge discount. It'd be nuts. Anyway, what else do we have going? Yeah, so Netflix. I was looking at this. I think I showed this one yesterday. So what I'm looking at, or was looking at, again, I've kind of scrapped it. I've kept it on the watch list because I'm curious how it plays out. But let me just refresh my memory. How did I draw this? Was it here? I think I drew it like this, from the very weekly low to the very weekly high. Now, if we go back to the stock box, as we mentioned yesterday, we do have Netflix with a bullish score of 11, which is pretty cool. You know, that's quite good. We've got all the financial metrics here undervalued, revenues going to the upside, profit margins trending to the upside, although the previous one not great. So yeah, overall, I would say it's actually pretty good. Then we obviously, again, fib from the low to the high. This lines up quite nicely on the 50% retracement, roughly with the low we've just formed here with the previous high. So break and retest on a higher time frame. So maybe something like this I actually would quite like. But again, because this is a weekly time frame, it's not like an H4 setup like I normally would use. It's just a bit too long term for me. This would be more of an investment type of approach, which I don't do. I don't pick individual stocks for investments. So yeah, I'm not taking it, but I'm leaving it on the watch list because I'm curious how it plays out. And that's kind of it, really. I'm not looking at really anything, just silver, longs, maybe a long on euro dollar if the opportunity arises. The only thing I need to do is just be very cautious about my exposure. So I'm already long on the dollar with dollar yen, short the dollar with dollar Swiss, short the dollar with gold longs, and I'm short the dollar with Aussie US dollar. So I've got the budget really for one, excuse me, I've got the budget really for one more short position on the dollar because I've also got a long position on the dollar by dollar yen. So yeah, I just need to really be careful on which I pick. You know, I would rather go with silver over euro dollar, but it's really now a case of which one gives me an entry first. So yeah, we'll have to assess when the time comes. Let's remember my instinct for like 4 days. Yeah, well, remember it specifically. You said Trump will do something and the US dollar will spike. Because we've also got Jackson Hole today. That could be a bit of a shake up. James, what's your Twitter? It's hold on. It's this at EliteTraders_IO. That's my, if you want to send me the picture of the setup, just send it to that Twitter account. How about long buy on dollar yen? I'm already in that position, my friend. So yeah, as I said earlier, I think generally speaking, dollar yen is probably the best one right now. And that's not really because of the fundamentals. The fundamentals are actually significantly weaker than, you know, pound yen, for example. The reason I'm saying it is, in my opinion, a better pick is because it's weaker. So there's still a good buying opportunity down here. Not financial advice, not signal, my personal opinion. Because we've not had, because the dollar's fundamentals are weak, it's not got the strength that, you know, pound dollar had to completely reverse and correct this intervention move. So the fact that we are, you know, moving to the upside slowly is good because that means there's more time really to accumulate positions in between now and sort of towards 160, 164, I would say. So yeah, I like dollar yen. I'm just going to sit through it and just see how it goes, really. Again, it's small size, so if anything really drastic happens, I will take a loss, but it'll be a very, very small loss. It's not really nothing significant. So yeah, I'm happy to just sit through it and collect the swaps in the meantime. I think that, yeah, as I said, I think that covers kind of everything that I'm in. You entered long at 159. I'm expecting 165. Interesting. So you expect dollar yen to break above the previous intervention level. So the way I see this, I think there's two outcomes here that both lead to the same final outcome, if that makes sense. So if we look at the previous level where the MOF was defending, which was 160. Oops, that's not right. 160. We can see the same sort of thing where we get to the level, we'll call it, they intervene and they defend this level basically for as long as they can. And then, again, because nothing's changed, the regime is still there, the carry trade is still there. Eventually we do break higher because people just keep buying the dips. It's really as simple as that. So then they, again, sort of looking at the history of this, they've given up on 160, allowed the market to move higher to 164. So we could see a similar thing where, they intervene at 164, the new line in the sand. Dollar yen eventually gets back there. They intervene again. Dollar yen gets back. They might intervene again. And then we break higher. Or we just break higher straight away. I wouldn't say this is overly likely. I would expect something around 164 again, but we'll see. And to be honest, it could actually come at 160. So what could be the situation is, yes, it got to 164 and that was panic mode. Oh God, dollar yen's 164. This isn't good. We need to intervene. We get the Fed involved as well. Push it below 160. Then we can start defending 160 again and intervening off that level. But again, that doesn't matter to me because nothing's changed. People are still buying the dips. So yeah. What's going on here? $400 profit till now. Very good. I'm glad you're in some profit. What's Aussie CAD score? Let's see. AED CAD -2, my friend. Not good. Let's just see when it loads what the components are actually saying about Aussie CAD. Let me refresh it. This is what can happen. Oil up, BOJ reacts hard, yen carry trade event, huge liquidity event, everything gets sold. Yes, that could absolutely be a possibility as well, Mega. Right, so what do we have here? So technical is bullish again. I'm not hugely bothered by that. Institutional activity is actually very bearish. So net positioning is bearish, and the weekly change was bearish. It's not good, not a good sign for buyers. The sentiment is bullish. So that means retail are obviously selling. So we get the contrarian reading here of being a buyer. Economic growth neutral. Labor market is bearish, and inflation is neutral. So yeah, I don't like this. I would say, yeah, because COT is so bearish and the labor market's bearish as well, I wouldn't want to be a buyer. But I also don't really think I'd be interested in being a seller. So what do we have here? Let's take a quick look. Interesting, actually, this market is moving higher. So what I would maybe expect, let me just get rid of the previous analysis here. Yeah, I think actually the market is reflecting basically what the edge finder has, which is just this huge sideways range. Because the edge finder is obviously a fundamental tool, when the fundamentals just aren't there, the market is less likely to actually do anything. So because we've got that negative score, that -2 score, which is basically, well, it is neutral. This market really just doesn't have that kick. It doesn't have the fire inside it to trend or to do anything. So I would actually kind of expect just a continuation of this range. We might actually get the break, retest, continue higher, but I would doubt that. I really think we're actually probably more likely to sell off from this high. Again, that's mainly just due to the lack of score and the technicals, so I could be completely wrong, but I don't really like this trade. Euro dollar cooked. Looks like a flag pattern on the daily chart. Hold on, let me see what you're talking about. I'm not sure where the flag pattern is. I don't really know what flag patterns are, to be honest with you. I think I've got the general idea, isn't it? Like this is, hold on, let me just try. Isn't this the flagpole? And then we've got something like this that makes up like the triangle for the flag, something along those lines. I get it. I don't really care. With the greatest respect, I don't trade patterns, especially flag patterns and things like that. The way I see this at the moment is we do have a potential entry coming into this 50% retracement. The edge finder is bullish, granted not the best sort of composite of readings. But as I said earlier, I would be willing to take a small attempt here and see if we can go higher. But yeah, I don't know. I'm just not a huge fan of it. The dollar seems to be getting a little bit of a bid as well at the moment. So I think, or not, I think one of the things I was talking about yesterday is the technical side of the DXY at the moment. So I would say, obviously, at the moment, it's a little bit early to be bullish. Fundamentals don't warrant that, but technically speaking, I would still say it's early if that's what you wanted to do. I would really want to see how the dollar reacts at the previous low. So for me, this is a very clear break, looking for this retest for then a continuation lower. So I think around 99.6 to 99.4 will be sort of the big moment really for the dollar to see, are we actually going to go higher? Can we break above and create some new highs? Or is this actually, again, just that break and retest? And then we're possibly on our way down to 97. What's the US oil score? I think it's pretty neutral, actually. Let me just check. Yeah, -1, so really nothing going on there. It's on the brink. Have you seen the 321 crack spread? I've got no idea what a crack spread is. Did you send me that picture, by the way? I don't think you did. I've got no chats. Oh, wait, hold on. I've got a message request. Oh, no, it's 4 weeks ago. Never mind. Okay. It's on the brink. Can we dive deep down to USD JPY? What do you mean? Drive deep down? What do you mean? Can price go down? Or do you want me to do a breakdown on dollar yen? You didn't say which Twitter. I did it. I'll do it one more time for you then. Elite Traders _IO. That's my, if you want to send me that setup, send it to this Twitter account. Okay. All right, I'm going to get that off because not here to do self promo. Okay. Yeah, I think we're caught up on the chat. I don't think there's anything that we have missed in terms of charts. If there is anything you want me to go over, just let me know. We do still have 20 minutes, so we've got some time. Let's dig out what's going to happen. I've already said what I think is going to happen like 5 times. I think we're just going to see dips getting bought. Doesn't matter. As long as we don't get the Fed cutting rates and the Bank of Japan hiking rates, I think we're pretty much set to go to continue higher. As I said, we might reach 160, and that is, again, the line in the sand. Because we got to 164, it could be a case of, okay, 164 was too painful. That's not good. Let's intervene. Let's get the Fed to intervene as well, push it below 160. Then we can make 160 the line in the sand yet again. But even so, it doesn't really matter as far as I'm concerned. And the reason it doesn't matter is because, again, we don't have a rate change. There's no shift in dynamics. So it really is, as far as I'm concerned, it's just a case of just allowing dollar yen to continue higher and not worrying too much about the noise. Of course, and I want to clarify, this doesn't mean I think dollar yen is going to continue higher forever and ever. It means that I think it's bullish until we get the central banks flipping. Okay. So, you know, I don't want to sit here again and say I think dollar yen is bullish and buying dips, but then someone leaves the stream, buys the dips when the Bank of Japan starts hiking rates and the Fed's cutting, saying, oh, well, James said it's bullish. Obviously, you know, you need to put it into context at the time and see what the landscape is. But at this very moment that I'm talking about it, I think it's still very easily bullish. What's my opinion on CAD Swiss Battle of the Titans? Well, they're both Nas. They're both completely different things. So what the thing I've got is for more advanced traders to look into context. So it takes in bank reports, headlines, events, things like that, breaks it down and gives you, like, how to explain it? Like what things actually mean. So if, you know, CPI is coming out, cool. What does that actually mean? Whereas if you're wanting trade ideas and, you know, a more simplified way to just get the ideas, look at the fundamentals, and just keep it, you know, pretty much what I'm doing here, keeping it super simple, straightforward. That's all you really need. Then Edge Finder. So again, it depends what your level is in terms of your experience and knowledge, and also what you actually want. So I love to hear repeatedly as I'm in long position. Okay, fair enough. You wanted some validation. I get it. What's my opinion on CAD Swiss? Okay. Where is CAD Swiss? I don't think I've actually got anything for CAD Swiss at the moment. Let me just see. It's not something that's popped up on my radar in a long time, actually. Yeah, it's -1, so we've got no reading. Score over time has been very lackluster, very briefly bullish in sort of maybe a week ago or 10 days ago, I should say. But yeah, there's just really not much here. Economic growth is bearish. Jobs market's bullish. Got no COT reading, no sentiment reading. Technical's bearish. Yeah, there's just nothing going on here. So I'm just thinking again. I've not paid any attention to this market, so I need to think out loud while I'm doing this with you. Okay, so we've got no fundamental reading, so automatically I'm completely neutral. When it comes to technicals, I actually do quite like the long side on this daily time frame. The reason is because what we've seen is a retest of the previous highs on the left. We've got the daily moving averages that have crossed bullish. So overall, it looks quite good. And we've also got these higher lows that have been printed. So yeah, that looks okay. The problem is, on what you'll see a lot of these Swiss pairs do is actually have longer term trends to the downside. So this is the weekly time frame on CAD Swiss. So what you can see is you could make money on these little moves to the upside, but generally speaking, the better approach, of course, again, not financial advice, but the better approach I view here is actually just selling the rallies. Again, obviously this is a weekly time frame, so it is much more of a longer term idea. But selling the rallies and actually trying to benefit from this overall downwards trend that we're in. Now, obviously, the problem with doing that is the swaps. So not great to be a seller. You get paid to be a buyer. Same with pretty much all of the Swiss pairs. So something you need to take into consideration. But again, with the lack of edge finder reading, the overall downtrend on the weekly time frame, I don't really see any advantage of trading this market right now. What's my bias on dollar Swiss? I know you just said you don't do patterns, but I've been tracking a head and shoulders on a daily, and it looks like we may be getting a retest of the breakout. Yeah, so actually, it's funny you say that. You are right, I don't trade patterns, but I've got basically what you're talking about marked up here. So actually, where is the head and shoulders thing? Is there a tool for head and shoulders? I don't know. Let me just have a quick look. I swear there was, unless I'm missing it somewhere. Anyway, okay. Whatever, it doesn't matter too much. So I know what you're talking about though. You've got the shoulder, the head, the shoulder, and like the neckline here. Obviously, again, I don't trade that, but I've got kind of the same thing marked up. So I've got the high here on the daily to the low fib level within the previous level of support or your neckline. And I was looking for this sort of, obviously the break, looking for the retest into the fib and continuation lower. So I am bearish. I don't really see a reason not to be bearish. I mean, we do have the bullish daily trend here. The H4 though is still bearish with the 200 and the 50 moving average. We are still rejecting the 61.8 level, and we are still sort of retesting the previous lows slightly above where I've drawn this the resistance or the support zone. We've also still got the edge finder that is very bearish on dollar Swiss as well. So I think from a sort of bird's eye view, or whatever the right terminology is, it's still a great short position to have. But I just think my entry might be, well, clearly wasn't the best entry. So I don't really have any problems with actually being on the short side. But again, I think the execution I took was just a little bit poor. It could have absolutely been better. But, you know, that's trading. You can't always get the best entries. Hey, good morning. What do you expect to come out of Washington Jackson Hole Symposium? It's a good question. I actually don't expect much. I mean, the fact that we've had the dot plot that didn't come out, a lack of forward guidance from Wash as well, it just doesn't fill me with much confidence that we're really going to get anything meaningful. Yeah, I could be completely wrong. It could take a much stronger point of view, or you know, a more verbal point of view, if you will, you know, publicly speaking. But we'll see. I really don't have much hopes in terms of it really doing much. It might just be a snooze fest. Oh, you're not verified, so you can't message. I don't really have any other ways for people to contact me, Mega, to be honest. I keep my life quite private. But again, maybe just pay $4.99 and get verified on Twitter. Hi, James. Just joined the stream. US dollar CAD making a lower low around the fib. Interesting, Christoph. Let's take a look at dollar CAD. I always like to see Christoph's name pop up in the chat. He trades basically the same as I do. So well, actually, there's been a few times where I'll say, "What about this market?" And actually, it looks pretty good. And it's something I wouldn't have spotted. So what was it? Dollar CAD making a lower low around the fib. What time frame are you looking at there? I've just hold on, just bear with me. Let me just figure this out. So fib from, I suppose we would consider this. Suppose we would consider this the previous daily high. I do quite like it. We are seeing rejections around the 200 moving average. The edge finder is bearish on dollar CAD. The stop loss isn't amazing. You know, if I followed structure or a structural type of stop loss at the previous high, it's quite a large stop with a pretty limited take profit, maybe around, maybe a 1 to 1.5. Maybe worth taking, but not ideal. So stop loss might have to be a lot tighter, something like this. And that would, slightly account for this previous high over here, account for this 50 daily moving average. So if we end up breaking above the fib, breaking above this minor high, breaking above the 50 moving average, it'll be a pretty swift stop out. So I don't mind the idea. I'm just trying to see if there's anything else I'm missing here. There's not really. Yeah, Christoph, I like it. I just would rather see a little bit more development. So whether it be a little bit of a higher move into the fib and then some sort of bearish engulfing candle from there, I think that would probably be the way I would have to get into this market. I just don't really like the current setup here. Hold on, let me just catch up with the chart. Ball out, good morning. Good morning to you as well. Okay, thanks. I'm not sure what you're thanking me for, but you're welcome. I buy entry today on gold if it visits 43.80. Very nice. I do agree with the idea of buying dips on gold. Is the GBP still generally strong? Have been swing trading pound Swiss and pound yen. Stop losses are trailing, but rather take profits if fundamentals are breaking down. Okay. Pound yen, pound yen is still completely fine. In my personal opinion, it's not advice on how you should trade or what you should do with your positions. Pound yen is bullish with a score of 4. So yes, we've got that. I'm also, as I've been saying for the past 50 minutes on this stream, I am still bullish on the yen pairs. So I've got no issues just holding to the long side. However, pound Swiss is a little bit different. And we spoke about this one yesterday. Now, what we see with pound Swiss is the weekly time frame. So, oops, hold on, let me get back to not sure what happened there. Here. So let me make this a bit bigger. There we go. So on the pound Swiss weekly time frame, what we can see is overall a bearish trend. We continuously fail to hold or really even break above the 200 weekly moving average. Where are we right now? Well, we're not quite there, but we are almost there. So I wouldn't personally feel comfortable holding a long position on pound Swiss right here. I would actually rather be looking to potentially actually be a short seller. Now, I'm not going to do that because I don't really have any reason to be honest with you, and it's a negative swap idea. But yeah, I think if I was long pound Swiss, I would consider probably closing the trade. Again, that's not me telling you to do that. You need to think for yourself and understand why you took the trade and what your exit criteria is. But that's just my 2 cents. Who's in the GC shorts being adventurous? Ball out. Good luck to you. Not that you need it. It's more about the markets are going to interpret what Walsh says when he's giving the speech, I think. So I'm off the charts until Monday. Good decision, Vincent. Yeah, I mean, that's the thing. Obviously, the markets will take what Walsh says, but it's more about what does he actually give anything of any significance, or is it just going to be a waffling for however long it may be? I don't know. Of course, it's good to be cautious. It's better to be overly cautious in the markets than overly confident, I guess. But yeah, I get it. Guys, remember somebody said gold is going to crash. Didn't you say that? Yeah, you did. Spoiler, I'm somebody. I mean, we probably should have defined what you meant by crash, because to me, this isn't quite a crash. But yeah. Simo, good to see you, my dude. Hope you're well. Welcome as I was triggered. Triggered from 46.73 again, moved to 46.18. Now retraced, could have gotten another $50. Holding with break even stop loss. Very nice ball out. Good stuff. That's what I'm watching ball out. Okay, so it does seem like quite a few of you are in short gold, which is good. I like the diversity. Do I hold my position through news? Yes, I do. I don't really see any benefit of holding a trade. Or sorry, I don't see any benefit of cutting a trade because of news, really, unless. Yeah, I mean, there are obviously exceptions, you know, if you've oversized, for example, or something like that. But yeah, generally speaking, if you place a trade, it's for a reason, and you should account for the news beforehand anyway. I have a marriage coming in a month, and I want to buy some gold, so I want to be cheap. I'm going to assume you're going to a wedding and not getting married, because if you're getting married, that's a weird way to say it. But yeah, okay. Okay, so we've got 4 minutes left. As I said, I don't think there's anything we've not covered really. So actually, Aussie New Zealand's back to being bullish. If you guys remember, we were talking about Aussie New Zealand long ideas. So maybe this could, I'm a bit annoyed I've only just seen this. I don't have much time left, but this could absolutely be a potential idea. So how could we approach this? Moving averages are a bit sideways. I wouldn't want to buy into this with these sideways moving averages. So I would, yeah, probably want to see a break of the previous highs, retest of the level. So again, break, retest, continuation higher. Let's see if the fib would line up somehow here. So fib there. Yeah, maybe not. So what about this? I suppose this could be an idea. This is really aggressive, though. I'm not a huge fan of this. But what we do see, if we take the fib from the current low to the current high, the 61.8 lines up with minor structure here. We've got the previous highs, previous lows, and a high over here. Not great, but it is there. And this could be potentially the sort of long entry. Could be worthwhile. I'll add it to my watch list. And I'll keep an eye on that one. I don't see gold heading to all-time highs again while everyone is just waiting to jump on board. It should just waste time in these ranges. Grab a low one more time. It's a fair enough statement. If we go to 4,200, I think we go break the floor. Yeah, I think there's a I think this is why gold is a little bit tricky at the moment. There is a lot of reasons for gold to go higher, but there's also quite a few reasons for gold to go lower. I think it's kind of just a case of waiting to see which catalyst actually happens. I mean, I think that idea could be applied to every market all the time, but hopefully you get what I'm getting at there. So yeah, I don't really care, to be honest, what happens with gold. If it goes lower, great, I'll buy. If it goes lower, you know, I'll look to buy some more. I really don't care that much. So one thing I was very clear about when I was placing these positions with you, a couple of weeks ago, was I actually placed these positions with the idea that gold was going to 3,500. These were the start of a DCA approach. So I've got 0.01 lots, by the way, just for reference and how small the positions are. So if it does end up going lower, that would actually benefit me slightly better, because then I can actually build up the position I did want to build up initially. However, I actually don't I'm not really expecting that at this point. I think we might have deeper pullbacks, but I'm not expecting it really to break 4,000. Doesn't mean it won't happen, just means I don't expect it to. Weekly volume is high on gold. A move is coming. I think that, well, if we've already had a 20% move and you're expecting more, that's it's interesting. I'm not saying that can't happen. I'm just saying that's interesting if gold could have, I don't know, like a 40% move to the upside with basically no pullbacks. That'd be quite an event. Such a boring trading every year intervention carry. It is, yeah, it's the same thing. Anyway, ladies and gentlemen, it's my time to end the stream. So thank you very much for being here. Don't go anywhere. We've got Alan Perez coming to take over the show. Great trader, very nice guy. You're in great hands with him. Thank you for being here. As I said, have a fantastic rest of your days. Stay safe. Don't get margin called. And I'll see you all tomorrow. Have a good one.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is 8cap. 8cap is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in a live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. 8cap has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out 8cap if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style, as well as your own risk tolerances. Thanks to 8cap for sponsoring today's content. Now back to the show.
Good morning, everyone. How's everyone doing today? Happy Thursday. Man, time has been flying by, man. It is already Thursday. Feels like a Tuesday. It is insane. Love the channel. Assemble. Thank you so much, man. We do our best here. Like the advertisement said, 8cap is offering a 20%
bonus on new accounts there. So definitely go ahead and check them out. That is a very, very solid incentive. Yeah, man. Ball out, you described the yen trade very, very well. Sitting all year waiting for a bank to intervene, and when it does, it barely moves, man. That is right on the dot. Sorry, I'm very thirsty. Right on the dot, man. You wait all year for it. You know it may happen. You don't know when it's going to happen. When it does happen, it is uneventful, I would say. It was eventful for a couple days, right? But nonetheless, it was not the traditional 2022, 2024 type of move that we saw in dollar yen. All right, let's see. Hey there, ladies and gents. Good morning, Yoshi. Hope you are doing well, man. Let's see. What are you guys looking at today? It's been quiet, I would say. NVIDIA earnings did really well. I would imagine that you have a risk-on day today. You also have two Anthropic, which is looking to come into the IPO space in October, and they're looking to be valued at what, like 2 or 3 trillion or something like that. So I do think that you have a positive landscape there for equities, especially given that you have yields expected to come lower. The Fed is likely to be on pause for a little bit. Let's see, CME Fed Watch tool, guys. Let's see what's going on there. And if you do have that risk-on environment for equities, the back of my mind tells me, okay, the traditional correlation or the traditional relationship is, equities up, dollar down, which I'm positioned that way. So let's see what we have on the probability side of things. And they're switching again. You still have the case to be made for 2.5 or 2 cuts or 2 rate hikes. I'm sorry, I'm tripping. 2 rate hikes. We'll see. This thing moves a lot. Let's see what yields are doing. The 10-year or the 30-year, I'm sorry, is near a very solid level that I'm watching very, very closely. My personal opinion is that there is another leg lower to be made in bond yields, right? That's kind of my thought process. And I'm watching level here, 5.150, right? This level is very, very solid. And if you do break this level, then potentially have a change in direction, change in trend here on the long end. You can see here that we've been, trading higher. We have this upward trend line here, and now you have the possibility of it starting to roll over. I like that idea a lot. So if you do break this level here, I think that the next level would be 5.0, right? 5% or 5.050. That would be pretty nice there. And then that could, after that one, you do have the 200-day moving average below that one as well. But again, we just need to see that level break. We do have Jackson Hole starting today as well. So we'll see if we have any clues or if that, makes the market move. I don't know if it's going to be honest with you, but we'll see. We'll be watching that one. Aussie dollar is one that I like. It's continuing to show its momentum here. Actually, let me look at currency strength just to see where everything's standing against each other. Currency strength, you have, yep, Aussie again up on the day. And then who's down on the day? You have pound, you have euro, and yen down on the day. Okay. Okay. Yeah, I like Aussie dollar. Aussie dollar has been stuck in this range though. So this is the tricky part about it, is that very well you could have a situation where you find some resistance right here, and then price continues to just chop back into the lower bounds of this range here. However, in the event that you do have continued dollar weakness, and the Australian dollar side of things is doing quite well, you know, you have elevated inflation, you have a RBA that's looking to hike rates, that they said that's not off the table. Then finally you could get a breakout of this range here, and then you could play for a break retest continuation higher. That's kind of what I would wait for if I want to continue this. Also, too, if you do get that event, that would assume that you have further legs lower in DXY, which is a possibility. Don't get me wrong. But I just need to see that start to shape up right now. Right now, you're seeing DXY up and you're seeing Aussie dollar up. So that's just showing me that the relative strength with the Aussie against the dollar is pretty strong there. So if you do have that leg lower in DXY, that would only fuel this even further. I hope that made sense for you guys. And everything else is pretty much flat today on currency side of things. So euro dollar is flat, pound is flat, Kiwi dollar is flat, yen's flat, Swiss is flat, like dollar Swiss is flat. These are all flat right now. So we'll see. I will say though, you are hitting my preferred levels of retracement. So with dollar CAD, for example, I went ahead and shorted this, right? I shorted this right here at the 200-day moving average, but you are also tapping into this level of resistance as well. So if that holds, I could expect continued downside there. A lot of these major currency pairs are hitting like these preferred levels, like the dollar Swiss, for example. It is pretty much getting up there with the 50% or already hit the 50% retracement level, almost to the 61.8. So we're still within the downtrend possibilities. Dollar yen, I'm not even going to look at that. That just has no technical structure. It's really tricky. Kiwi dollar, for example, you had a decent pullback here. You tapped into this resistance. You're at a pullback. So if you do find some buyers in here, I would expect that if we revisit resistance, the key thing to look for would be a break and retest and continue higher. That could also be another good trade as well. Pound dollar, let's look at pound. Pulling back here some. Maybe we pull back just a little bit further to line ourselves up with this previous structure here to the left. That would be something worthwhile looking at. But nonetheless, you are waiting for a breakout opportunity of this level of resistance, break, retest, continue higher. Very, very basic stuff that I'm talking about, guys. This is very simple. Just support, resistance, following the trend. Euro dollar here as well, right? You had some kind of a breakout attempt here, pull back into this level of support. You can see that here. You are also holding into the 200-day moving average as well. If you see the 200-day moving average kind of hold well, then I would imagine that you have another attempt to break out higher, which I'm positioned that way. And then Aussie dollar, of course, just waiting for the breakout. It's been very, very strong. And that's pretty much it for currencies, right? For currencies, I am positioned dollar short. If we go to top setups page, it should be aligned. Yep, euro dollar is bullish. You can see that here, very bullish. You have pound dollar bullish. You have lots of things bullish. You have dollar CAD, dollar Swiss, very bearish. So I'm basically positioned in these three trades. Euro dollar, very bullish. Dollar CAD, very bearish. I'm short. Dollar Swiss, very bearish. I'm short. It's that simple, right? It is that simple. The edge finder is telling me that's the bias. I wait for key pullbacks, which we are getting those pullbacks right now, right? So hypothetically, if I was not in a trade right now, this is what I'm looking for, right? A pullback into this level right here, right? And this is not just a random level. This is a level where you have the 200-day moving average lined up. You have a level of support right there as well. And if you put out a Fibonacci retracement level, you're at the 38.2, right? So you have the edge finder telling you very bullish. I'm waiting for the pullback. The pullback is right there in front of me, and I execute the trade with defined risk. Dollar Swiss, similar idea, right? I have this. I'm going to remove all of this here, right? Dollar Swiss, very bearish reading. I measure the move out with a fib, right? I have this level of resistance right here, potentially. I also have the 50, the 61.8, the 38.2. I got the pullback, right? It's right in front of me, and I execute the trade. Dollar CAD.
Oops, was my mic muted? No. I have this pullback into this level of resistance right here. You also have the 200-day moving average.
If these general areas hold, then I continue trading lower. It's that simple, guys. No need to overcomplicate it. I'm not a fan of like overcomplicating the technicals or anything. I just want to be filled in a general area that I think is a premium, right, relative to where price action could go, and follow the overall trend. That's what I'm trying to do. And the Edge Finder helps me do that just well, right? So simple. It does all the heavy lifting for me. It just gives it to me on a silver platter. The bias, it considers everything that we need, like seasonality, where institutional people are buying and selling, crowd sentiment, all of the economic data figures, all of that, and it gives me the score. So if you want to try Edge Finder, go ahead and use the code Allen, right? If you do end up purchasing it for about a good discount, I'm not sure what the discount is, but yeah. Let's see. Simo says, Alan, buy a Mac, mic, cash out the gold trade. Yeah, I probably do need a new mic, actually. You bring up a good point. I like this mic, but when I got it originally, I was being more budget conscious, and it's probably not the best mic. I see a lot of people use the Shure mic, and it seems to work really, really well. I think I might bite the bullet and just get the Shure mic too. Also, too, because this mic here is plugged in with USB-C, and I think that dilutes the mic quality, if I'm not mistaken. And if you use the other method, it actually gives you pretty solid audio. So, Simo, it's definitely something I've thought about. This mic, like the USB-C thing right here, right over here, it's very easy to get unplugged, and that's why I have these like spurts where it's silent. So yeah, I might do it, man. You're right about that. I gotta stop holding on to this one. Hey Ellen, do you have the limit on EU still? Yes, I'm already filled into the position. So I actually filled in prematurely, actually. Right over here, I still have my stop below structure, right? I still have my stop loss below the 61.8. And this is one of those things where like I got in prematurely, right? Got in prematurely manually, but the stop still needs to be where it needs to be, right? So even though my fill price was not at the 38.2 and it was just slightly higher, my stop loss is still exactly where that needs to be. And what that means is I have to compensate for that, right? So my risk to reward ratio is going to get worse because of that. And I also would risk less on the trade because the risk to reward ratio is not that bad. So, or not that good. So yes, but technically right here, I would have been filled because my limit order was somewhere by the 200-day moving average. So I basically would have been filled in today, right now, if I were not in the position already. But I'm already in the position, but my stop is still below the 61.8. And obviously, if you were to break the 61.8, then that invalidates the upward trend. And at that point, I just accept that I was wrong on the idea. Alan has been a bit of a gold bug. Yeah, man. I mean, gold is a clear winner in this whole environment right now, right? Gold is one of those things where it just does really well in most scenarios. I see the appeal for it. The momentum is there. The attention is there. The momentum, like everything is there. Everything is there. So I definitely want to participate. Now, this pullback that we're experiencing here, I'm sure lots of people, myself included, was like, is this the pullback that we're going to get? But, I'm not going to take the pullback. I'm going to wait for something better, right? So if I put a fib from here to here, I think that we're close to the 38.2. But ideally, if we can get in between the 30.2 and the 50% right here where that 200-day moving average is, I would take that all day. So I'm going to wait for that to happen. That's my level. If you guys want to look at the chart, screenshot it, whatever you want to do, this is what I'm looking for, right? A pullback from this leg, this low to this high. That's the fib from here to here. And the 30.2 is pretty close to price right now. And the 50 is right there in between the 200-day moving average. So that's what I'm waiting for. That is what I am waiting for. Could happen. Silver looked a lot better from a technical perspective. Like the price action has been slowing down a little bit. And it was pulling back into, it didn't actually do it, but pulling back into this previous resistance, probably turn support. We'll see. But yeah, I love gold, man. And gold is still getting a very bullish reading. So love to see that, right? We're still in line with the fundamentals and the sentiment. So I am just patiently waiting, man. And when it happens, right? Thank goodness I didn't chase price right over here, right? Because I would be feeling bad about myself if I chase price and then I got the pullback that I said I was waiting for. So I gotta stick to the rules, man. GC is about to open up. Lex says, I'm looking at the same EU trade and it keeps dancing right about my 38.2. Yeah, it's a good trade. I think it's a great trade, right? This to me, Lex, is like the DXY, right? So DXY is basically having a pullback into the 200-day moving average, and then this level right here, this support turned, or this resistance, this support possibly turned resistance is what I meant to say. So I'm definitely looking forward to it. I'm in the trade right now. It's giving me the pullback. It has been flirting with this level for some time. It's kind of been flat, but that's okay. That's okay. You know what? I experienced being in euro dollar. I bought right here, right, or somewhere in this area. This is why I'm actually taking this very well. I bought euro dollar right here, and forever it was chopping around right here, not doing anything. And then one day it just pops higher. And then all of a sudden my take profit got hit. I'm like, okay, cool, I'll take it. So this is a piece of cake, right? I'm waiting for the retracement level. We got it, and I'm just waiting for something to happen. And if I'm wrong, I'm wrong. That's okay. But right now, I really like the current landscape. You have oil here rejecting this bearish trend line, which is good for me. If it continues to stay under pressure, that's good for the inflation story. That's good for yields, right? Yields themselves with the long end has made some developments lower, right? We are now sitting at this level of support. We came from here to here, so that's good as well for the dollar bearish story. Lots of things happening. Technicals are looking pretty clean as well for the DXY. You have legs lower, breather, leg lower, potentially breather moment right here. I'm potentially looking for another leg lower. Everything is looking quite well. You have the edge finder kind of in our favor as well. So I'm just sticking through it. I am just sticking through it. Nothing to change here. Really nothing else, any new developments, nothing like that. On the actual Middle East stuff, let's see. Just out of curiosity, I don't think I see anything. Nothing red. Yeah, it's been pretty quiet, guys. Which, when things are quiet, the possibility of something popping up is great. Let's see. Yeah, there's nothing really. Really nothing. We have jobless claims here shortly. Yep. Let's see what happens there. Tokyo CPI, that could be a good one. You have the Japanese unemployment rate and their CPI, which is looking to tick lower, supposedly. We'll see. We'll see. What are you guys watching, though? Are you guys kind of sticking with the same kind of watch list as myself, like looking for the dollar and looking for gold? Or are you guys kind of broadening the scope a little bit and looking at other things? Curious to know. I know Ball Out's watching Cocoa, which shout out to Ball Out for that. What's your view on AU? I think it's bullish, man. I think it's bullish. Here's why. Elevated inflation. RBA is looking to hike rates or is not against it by any means. They voiced their opinion on that. And look at this. With AU, you see that the Australian dollar is doing really good right now. It's very strong, right? And right now, the dollar is also strong, right? The dollar is seeing some bullish momentum, right? Whether it be a pullback or whatnot, it is nonetheless getting bid up there. So while the dollar is getting bid up, the Aussie dollar is still making advancements against it, whereas things like the euro are trending lower, right? So you can see here that as dollar is going up right now, euro's going down, right? As dollar is going up right now, pound is going down, right? So with that being said, you have dollar going up, but Aussie dollar is also going up right there. So that relative strength is showing me that the Australian dollar is stronger than the US dollar. So in the event, and this is, in the event, not that it's going to happen, because I don't know if it's going to happen, but in the event that you see dollar start to fade and Australian dollar continues its momentum, well, that would only propel this higher. Now, does that mean I blindly buy Aussie dollar right here? Absolutely not. By the way, I have 3 trades open short the dollar. So by me going long Aussie dollar, I'm just adding to that exposure. So maybe I dial it back down somewhere else and then add into Aussie dollar long, or I go in with very little size. But nonetheless, that doesn't mean I blindly buy Aussie dollar right here. I either wait for a pullback and continue higher, or I wait for a break and retest and continue higher. Don't get in right here, right? That's just me, right? I'm waiting for technical confirmation. My bias is to the upside, but I just don't know what the technical confirmation is going to be. Is it going to be the breakout and retest and continuation, or will it be the pullback? So that's my thoughts on Aussie dollar. But you can see here what I talked about, currency strength, relative strength index. You can see that the Australian dollar is the strongest currency of them all by a long shot. You can see it's the dark blue one right here at the very top. I'm just waiting for an edge finder and a pullback on AU. Yep. Either a pullback or a break and retest. And on the edge finder, it's not quite giving us the bullish reading just yet. Probably because you have the recent trend for the dollar strong, but also Aussie dollar trend strong too. Looking at Nasdaq. Okay, so let's see. Let's look at Nasdaq. Nasdaq, how's Nasdaq doing? I would imagine that it continues higher. Let's actually look at Nvidia. Good earnings. The post market was up like 5% last time I checked, or the pre market. Let's look at that. Okay, yeah, Nick, shout out to you, my friend. I know you're in this trade too, and there in the background. That is doing quite well. Nvidia did its thing. They just haven't missed, man. They haven't missed. What's the saying? What's the meme? You don't miss or something like that. That's Nvidia right now. Nvidia is the golden boy. Let's see. What about gold? Yeah, gold. I have to set my expectations right with gold, right? Because a lot of people are expecting gold to reach all-time highs, and I think we have a better environment for gold. Don't get me wrong, right? We have made a decent recovery from this downtrend that we've made. However, the question is still whether the Fed's going to hike once or hold rates, right? What caused us to have this major rally in gold here was central banks around the world were looking to cut interest rates, right? And so that's not the case, right? We have definitely improved, right? Because right here we had the war in the Middle East, right? So you had inflation fears, you had global yields on the rise there. So basically the money printers getting turned off. Gold does not like that, right? Because gold doesn't yield you anything. So if you have central banks around the world looking to hike interest rates, right? Like, for example, Australia hiking aggressively. Well, instead of parking your money in a non-yielding gold, you can just park that into the Australian dollar where you could yield more in the meantime, right?
Hello? Yeah, that was what was holding back gold. Now you're going from super hawkish central banks to slightly neutral. And so although
the gold story has improved some, right, you still don't have that, like, how many rate cuts are we getting? We still don't have those aggressive money printers getting turned back on, right? So that's why I say, like, gold can go to the upside, absolutely, but I just have to set my expectations, right? I don't think that we're going to have a straight shot to all-time highs. Definitely not the case. I think, my personal opinions, I think that we can get there, but I think that we get there kind of like in a slow way, right? A slow and steady way. But I could be dead wrong, right? There also could be the case to be made that in the events that the war in the Middle East just gets resolved, right? Supposedly we have mediators going over there talking. If there is some kind of resolution that is solidified, well, in that case, likely you have some more war premium getting priced out of oil. And if that happens, then likely you see yields lower, and then that could bring back the question, okay, that's behind us, we can go back to rate cuts, and in that case then the environment would change drastically for gold, and then you see gold kind of shoot higher. So that's also something you have to think about, right? But right now you still have the war in the Middle East happening in the background. You have yields kind of flattening out, getting neutralized, but you still don't have like this aggressive rate cut story going on around the world, right? That's the thought process with gold. Any thoughts on pound CAD? Let's look at pound CAD real quick. Let's go to pound CAD. We'll go to the edge finders, see what we see. Let's see. Pound CAD, where are you, buddy? Don't see it on. It's probably a neutral. That's what it is. Let's see. Pound CAD. It's neutral reading. Okay. Looking at this here, I had this drawn up. I didn't execute the trade. Again, I've been neglecting the minors a lot here recently. I've been focused on metals and majors. With pound CAD, right? You have this level here from a technical perspective. You have this potential level of support. You have the 200-day right there. If I were to go long on this pair, I would wait for a pullback back into this level and see that this level actually does hold before I wait for a continuation higher. So for right now, you don't get that pullback, there's no trade. You just have to sit back, relax, wait for something to happen. Thoughts on dollar Swiss? Dollar Swiss, I am trading this to the downside. So we do have a pullback into some key levels here, right? So we had this leg lower here, this big red candle looks like a Japanese yen intervention candle, but it wasn't. It was a Scott Bessent intervention candle. Scott Bessent went ahead and addressed and announced that he was going to up the bond buybacks from 2 billion to 4 billion, basically buying back some of those old, longer duration, stale bonds, adding some more liquidity into the system that caused the long end of the curve to kind of go down there. You had dollar weakening across the board, and you had lots of strength in the Swiss franc. And I think the reason for that was that the Swiss franc was the next best option, right? So if we go to macro scanners, we go to equal strength index. This considers basically the longer term kind of strength for a currency, right? So the equal surprise index, that's short term. The equal strength index is more long term, right? So with this, Swiss franc is bullish, right? It's above the dollar. So when you had that sell off into the dollar, you did have a rotation to the next best thing, which is the Swiss franc. So with this one, I still like this one to the downside. I have some very, very basic kind of just trend line here to the downside right here that we respected so far. We are getting a pullback into the 50% retracement level as I speak right now. So as long as you stay below the 61.8 and below this trend line, I think that the trend is still to the downside. You've also had macro data for the US, which is pointing to the downside direction. So remember, we had 2 NFP reports bad. We've had cooling inflation, which cooling inflation would give the Fed the room or the confidence to not have to hike interest rates. So you have a lot of things in favor for dollar downside that I'm, looking at right now. That's pointing me for dollar downside. So that's why I like dollar Swiss to the downside. I said downside like 4 times right there. Goodness gracious. But yeah, that's what I'm looking at. So dollar Swiss, one of my favorite trades. It was a big winner for me last week. I took advantage of this right here. I closed it out and then I re-entered on this pullback. So hopefully I capture the next leg lower. But if not, so be it. I already got some of it out. With dollar CAD, I like that one as well. We are trading into the 200 right here and this level of what could be resistance. You have a pretty solid downward trend. And again, macro for the US has not been the best, which is leading to its short-term demise here. So I am trying to trade that the best I can. Trump hitting on Insta that Canada may be the next target. We'll see, man. What do you guys think? Canada being the next state of the US. Are you guys in favor of that? Are you guys not? I will say Toronto is beautiful. I don't think he do that. Prizark, was that legit or no? I don't think he did that. Naming Lake Ontario to Lake America. I don't think he did that. I could be wrong. Don't know. Simo, fresh out the gates here. No negotiations happening right now with Iran. Okay, we'll see. What's oil doing to this? We'll watch oil, right? So the way I kind of navigate this environment now, right? We've had so many of these like positive headlines, negative headlines. They contradict each other. What I like to do is I just like to look at the price of oil and I like to look at yields, right? If oil is really moving on this headline that Simo just gave to us here to the upside, well, then maybe it's true. If it stays flat, maybe the market already knows this. So I'm just going to be reverting to oil and yields to see how they react. Right now, the reaction is slightly muted. So we'll see how the day develops. But we'll see, guys. My portion of the segment here is coming to an end. I'm going to pass the show over to Nick here. I'll be back in about 30 minutes or an hour or so. So sit tight. It's going to be a great segment. Stick around. Leave a like for the stream so the algorithm knows that we're doing well. And with that, I will see you guys in a bit. Bye-bye.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show. All right, guys, we are back for another one, and we've got another brand new special guest to the live stream. He's here with me today, Kyron Eidelberg. How are you, man? Good to have you on the show.
Thank you for having me. I'm doing good today. How about yourself?
I'm good. Did I say your name right?
Yeah, yeah.
Okay, good. You never know. I've had a good streak recently. We have new people coming on the show. It's been awesome, bringing new thoughts and ideas. I always want to make sure I get the name right, because that would be
I appreciate that.
Yeah. So I've been following you on Instagram for a while, and you've been active over there for some time. And I noticed the other day you sent me a DM that you had tuned into the stream, that you had watched a little bit of the content. I've seen you in here before. So it got me curious, because we're always looking for more macro traders to come join the conversation, or at least just traders who have some kind of new angle. We have technical traders on here, fundamental macro traders. We have swing traders, day traders, futures traders. It's kind of a melting pot of all sorts of different trading, backgrounds and ideas. So I'm glad you're here, and I'm curious, what kind of things do you trade? I know you trade a little bit of Nasdaq. You trade NQ futures, is that right?
Yeah, so I trade the Nasdaq, the S&P 500, and US 30. I typically trade on the future side, but for today, I have like all of my Forex charts or my CFD charts up. But typically, I trade the Nasdaq and gold. Those are the two assets that I've seen the most success with in the most recent years. I used to trade Forex about when I first started trading. Believe it or not, I actually got introduced through Forex about 5 to 6 years ago through one of your videos, and that's what I had studied for quite some time to learn, just how trading works. But then I navigated about 2.5 years ago. I navigated over towards future side, because I predominantly trade prop firms. I do also trade live capital as well, but for me, it was just more lucrative to go, switch over to futures.
That's awesome. Yeah, no, and sorry about getting you getting that video out to you. I might have accidentally got you into a far deeper rabbit hole than you were expecting. So, but in all seriousness, that's awesome. So you trade, because I feel like I had seen in the past you were more focused on the Forex side. Several years ago, I too was a little bit more on the Forex side, and I feel like I navigated a similar way to you. I mean, I trade a lot of Nasdaq. I trade a little bit of everything, still Forex, but also gold and individual stocks. So it's always cool to hear, kind of where people settle out. And I think with enough time in the market, doing different things, you sort of find what is most suitable, what most interests you, and what kind of jives best with your style. And I know you do a little bit of prop firm trading as well. So you're trading your own accounts and prop firms. Is that right?
Yeah, that's correct.
Got you. Yeah, that's awesome. So if you would like to, by the way, Kyron, if you want to share your screen, there's a share button at the bottom there. You get some, I like your charts, by the way. You get like dark looking charts like mine. I think
Oh
it's cool.
yeah.
Yeah. So if
Yeah,
you
I
want to
got
share your screen, you can. You share any ideas that you're looking at. Guys, here in the chat, we've got Nasdaq moving up a little bit, 0.5%. Obviously, yesterday's big headline was the NVIDIA earnings. The Nasdaq is off of its recent lows here, a couple days up, and a nice follow through from the NVIDIA earnings. I did have a play on NVIDIA. It worked out decently well. I'm still long the stock. I've got to stop on it. I'm looking for some sort of break and continuation of this move. You can see stock market is not yet open. This yellow line represents the bid ask here in the pre-market, but I do think that NVIDIA looks really solid. We had incredible earnings from NVIDIA, and that's a good tale, I think, for the broader market. This whole market's built on this AI revolution, all this excitement, etc. And so the NASDAQ has been pretty choppy in the last few weeks. I think if you're more on the day trading side of things, it's been a tough chart to contend with. You've had a lack of kind of like follow through in really either direction. I'm wondering, Kyron, what are your thoughts on NASDAQ? You mentioned having traded a lot, and also what time frames do you get into? I'm curious. We can take a look at your chart, see what you've got in terms of what you're looking at.
So for me personally, because I do again trade on the intraday side, and I also do hold swing positions as well. So for me, I typically will start with, at the beginning of the week, I'll start with the weekly time frame, just understanding where I'm at on a larger time frame. I always say it like this: the markets are like a puzzle, and if you were going to do a puzzle, you would first start with like the corner pieces or the outside pieces, which are the frame, and then the intricate details are what our lower time frame are typically showing us. So for me personally, the Nasdaq has been relatively rangy for the past couple of weeks, been stuck after we got that bullish impulsive run from April all the way in through May here. Then we kind of started to slow up within this range. Now, in terms of this on the lower time frame, on the daily time frame, an area that I've been very interested in is this 28,726 resistance here. I kind of said that you had this resistance marked out as well, but this resistance just showed me, and this is kind of how I teach it to the people that are in my community. I look at this as a weekly resistance level. So for me, if I was drawing out circles here, this would be the equivalent of like 10 circles worth of strength here. So like for me, this is a very, very strong level that price could react off of. So when it comes to now looking at it as an intraday setup, I would come down now to my 4-hour time frame, and I'm determining, because I typically will go from my 4-hour time frame, and then I'll work my way down to the 1 hour, and while I'm trading futures, I'll also execute on the 5-minute, 15-minute is typically where I'm looking to execute. So for me, it comes down to a couple of things. So one, we've determined that our weekly time frame has a very strong level of resistance right here. And again, I just indicate that by like 10 circles of strength. I like to keep it as simple as possible. So this is a very strong level, right? And this is just visually how I can see it. So as we created this move to the upside here, price was creating the higher highs and higher lows. And then we had a shift here where price came down and for me took out a key area of interest low, shifting the market structure from being bullish on the 4-hour time frame to now being in a bearish, what I like to call a corrective wave. Now, overall on the larger time frame on the weekly, we haven't seen a ton of different like very impressive impulse moves. But in terms of this volume here, this actually shifted my market structure. Price began to create a low, then we got a lower high, a lower low, a lower high. Now, what we did though, is we came now back into that strong level on the weekly time frame where we could see a possible shift off of. And this is kind of what I show to my members. So when we come down to the 1-hour time frame here, I'm looking, okay, what is the reaction that we get off of this level? Again, 10 circles worth of strength here. And then what are some key levels that we could actually see price go to and reject off of? So for instance, yesterday we had on the lower time frame, again, I trade both larger time frame and then the lower time frame as well. But for me personally, we have essentially this level here, which was yesterday's key. Essentially, one level of strength is how I look at it. And then we have a 4-hour level resistance here. I would include this to be like 3 circles of strength. And then we had on our daily time frame, if we come back up to our daily, we had our previous day, or previous week high. Let me, excuse me, go to our, hold on, our previous day high. I think it was what it was. Yeah. So we had previous day resistance at this area here, this area being 29,400 resistance. So how I look at this is an area that price, if it breaks through, we could actually see some volume off of. And again, in terms of relative strength, this level down here is much harder to break through than it would be for us to actually break through this level here and then this level up here. And why I say that is because there's a couple of things. One, we didn't have a lot of fundamental volume that is driving the markets from both this week and the week prior. In terms of, we had PCE data come out last night or yesterday, and then we also had NVIDIA earnings come out as well. But for me, those weren't as big of drivers to be able to get us through this weekly resistance here. And that's kind of why we started to see, or at least from my understanding, why we started to see the Nasdaq begin to like bow off here, where we're starting to form this U-like shape as volume begins to shorten up. We had an impulsive move here, followed by a correction, another impulsive move, but smaller than the first one. And then we get another impulsive move, again, smaller than the second one. And now we've actually seen, based off of, and I know I got a lot of stuff on here, but based on how I execute, we've seen a shift in this 4-hour time frame where not only are we rejecting off of a larger weekly level, but we are now taking out a lower time frame area of interest high by breaking through what I consider my key high here, which was at that 29,400. And another thing about this area is not only is it a key area of interest high, but it's a psychological whole number as well. So for me, this is an area that it would be a little difficult for price to break through. And if we come down to like our lower time frame here, we can see that yesterday after we got NVIDIA earnings, we did see a spike, and then we came back down again, an area that if broken would add volume to the market. So the NVIDIA earnings, adding that volume into the markets and being bullish for NVIDIA in general, I believe is what attributed to the volume of breaking through this high here, adding volume, and then we come back down to test this level. So for me, I am long-term bullish on the Nasdaq, and coming into the day, I will be looking for some intraday moves to the upside, potentially targeting current day highs. But as a whole on the Nasdaq, I'm really interested in seeing, okay, well, what is going on with the world in terms of, are we looking to cut rates or are we looking to increase rates? And I believe that with the CPI data that we saw was a sign of, a cooling inflation. But if we continue to see the price of oil continue to go up, then what does that look like for, electricity bills and gas prices and things like that? So then we could see a potential spike in inflation, which could be leaning more towards rate hikes.
Sure.
So for me, that just there's a lot of things fundamentally on the longer term that would make me potentially bull bias on the Nasdaq. But in the technical term, short term, I am bull bias here today. I will be looking for possible longs for the Nasdaq. But in terms of like the overall structure, I think gold is a much better structure to be looking to trade for me personally.
Yeah, no, and I like what you did there with the circles concept, is obviously like you're kind of taking this multi-time frame analysis approach, and then you're overlaying like priority, right? Like that's another way of saying it, is like you're putting on priority to these critical levels that you're watching. You're saying, okay, Nasdaq, this level, because not all levels are treated the same, right? Like you have certain levels that are like, this one has a lot of history. It was a big breakout spot. We found huge support there. When we broke it, price flushed. When we broke back above it, price ripped. So like this level that you had drawn on your chart as well, clearly has like a lot of history there. So we would want to, add some kind of priority and watch that critical level quite a bit. Another one, like a really obvious example, would be the 50,000 level was just a big psychological level for the Dow Jones for a long time. You can see it broke, it came back down, it acted as support. That level we might want to allocate a little bit more priority to, rather than just being, every single level treated the same. So I think that's actually a really interesting concept and an important one to kind of mark priority to some degree in regards to the levels being watched. So Nasdaq, again, NVIDIA earnings were very, very good. That being said, I think the market had such high expectations that with earnings numbers as good as they were, a lot of companies beating with that sort of magnitude would be up way more, like 10, 15%. Yesterday, I talked about I am long the stock. I like the setup personally. But even still, I knew that the challenge with a stock when everyone really likes it already or has, there's a significant amount of call skew on the option side, just meaning simply for listeners who don't know what that means, call skew is the idea that, people are buying puts or calls ahead of earnings reports, which is just leveraged bets in the options market. And to use your circle concept, way more calls were bought, right? There was a lot of priority from the crowd on the call side. And I think you're pretty familiar with our content here to some extent in regards to like put call ratio data, something that we really track a lot. If we're looking at, like, for example, let's just pull up here. This is the S&P 500. From a big picture standpoint, S&P 500 has actually had a lot of put volume recently. The way to read this is that a high put call ratio for listeners is basically a lot of put demand, crowd sentiment being very pessimistic. And while I don't have the data specifically for NVIDIA today, just for those of you guys who do have Stockbox, which is our other product that is for specific stocks, we will have put call ratio data coming for individual stocks. And if I had that chart today, then I would almost certainly be able to show you what I saw elsewhere online, which is there was a ton of call volume. That chart would look extreme to the downside ahead of the earnings. Now, why that matters is that when crowd sentiment, and this is a huge part for me, Kyron, and I think for a lot of listeners, the huge part about this is that when crowd sentiment is really one-sided on something, it sort of mutes the potential of that side and increases the risks to the other. So if you think about it, if everyone and their brother is, bullish on NVIDIA is going to be amazing, and then NVIDIA does amazing, then the stock will go up a little bit. If everyone and their brother is super fanatical, excited, and bullish on NVIDIA, and NVIDIA disappoints, now you have everyone on one side of the boat, and that boat can flip the other way real quick. So I think, NVIDIA worked out. So we're here with hindsight. We know that it was fine. But had there been any hiccups, any uncertainties, we could have easily seen Nasdaq down, 1.5% today. I think the skew, that call skew, is something to pay close attention to. There's the three prongs that I'm sure that you've probably heard me rant about if you have watched streams or videos: fundamental analysis, technical analysis, and sentiment analysis. All three, these are like the big trio for me. We all have, as traders, like our concepts, like you highlighting priority with your circle concepts on various levels. For me, this is sort of like my bread and butter, is understanding that fundamentals matter because that's what drives price. Technicals are timing, entries, and exits, but sentiment and positioning is what creates massive risk reward potential. When everyone is bullish on something or everyone is bearish on something, a disappointment to the prevailing narrative can be violent in the opposite direction. That being said, Nasdaq pretty choppy here. I'm curious if you are as much of a gold bull as I am, Kyron, or if you think differently. And if you do think differently, then please let me have it. I want to hear from the bears.
Oh yeah, no, seriously. So
yeah,
for me personally, I am bull biased on gold. Now, I'm bull biased on gold for a couple of different reasons. For one, the biggest reason being that gold throughout the test of time is the only currency that has held its weight, right? And it's kept its value. And in terms of, especially, and I want to get your thoughts on this, how do you feel about the US allocating $950 billion in towards buying bonds?
I think it's a bullish catalyst for gold personally. That's a lot of money printing.
Yeah. So for me, just even technically on gold, I am bull biased. Now, there's a couple of reasons why. Again, starting with that weekly time frame, we have this resistance here at about this 40,000 or 4,000 level. So I'm gonna just put that there because I like psychological whole numbers. So 4,000 level is an area that we've seen in the markets has been a pretty difficult area to break through. And then just aligning that with our lower time frame here, coming back down to the daily, you can see that we were creating, our lower lows and lower highs in this bearish market structure here. And then as we crept into this level here, again, a very difficult level for gold to actually break through. And I remember telling my team that, hey, look, selling into this resistance here is just not ideal for me. For me, I would much rather price break below this resistance and then see some type of rebound for then a continuation to the downside. But what we've seen happen is a couple of different things and a couple of clues, as I would like to say, because for me, I always tell myself that I don't have any crystal ball, but I am a market detective. So what I'm doing is I'm trying to take the clues that the market is giving me to kind of formulate a picture of what could potentially happen. So what we started to see happen is not only did we dive into this area where it's a very, very strong level and a hard level to break through, but we are beginning to slow up in volume here. Price is starting to make this kind of U formation. And for about 4 or 5 weeks, we just really kind of danced between this range here for gold, right? And so when it came down to, okay, where is gold? Is it gold going to be bullish or bearish? I told the team that for me personally, I want to see, are we going to get above this range here? Or are we going to break below this range? And then going back to that circle analogy, this is essentially like 10 levels of strength here. Though we can break through, if we do, we would likely see an influx in volume once getting through there because we have clean price action to our left-hand side below these lows. So in terms of this, again, this was a weekly level, which would be, let's say, 10 circles of volume. And then we have our daily level here, which would be 7 circles of volume. So if we're looking at this in terms of how much volume it will require to break each individual side, it would be easier for us to take out this high, being that we're not only slowing up in volume, but now we've come down to an area that's going to be a little bit more difficult to break. And so what we actually seen happen is that we got this impulsive leg to the upside here, which was very, very bullish, right? And if we come down to our 4-hour time frame, we can actually see this a little clearer. So you can see these individual legs that we got for gold. So currently, you know, long term, I am bull bias on gold, but in the short term, I do believe gold is due for a corrective structure. And I'll kind of explain that a little bit here. We got this impulse.
Real quick, I just want to cut you off.
No worries.
In the situation here that you have gold moving higher like this, if you think, because I get this question all the time, so I just want to throw it at you and see what you say. I also am bullish on gold. Would you take any counter trend trades or like to the kind of prevailing uptrend here that you think, like you've pointed out, like, okay, generally I'm looking for pullbacks, I'm bullish on this. Would you take any counter trend trades? Personally, I will not. I just like to stick with the trend, wait for the pullback. Do you ever trade that retracement?
Yeah, so for me, I have 2 separate models. I have a continuation trade and then a corrective structure trade. So a continuation trade for me would be if, you know, our 4-hour and 15-minute are in alignment in terms of, you know, market direction. I'll look for a continuation trade. I will take corrective structure trades where let's say our 4-hour and our 15-minute are not in alignment. That goes against the direction of the larger time frame trend. But the one thing that I always tell the community is, like, these trades are going to be short-lived and slower volume. So in terms of an overall volumes perspective, I will execute on them, but they're trades that I'm looking to target, you know, whatever a key low is, lower time frame. And I'm not looking to hold these trades as I would be for a continuation trade. Those are the trades that I'm going to look to hold longer. And then another thing is I will reduce my risk because, again, the earning potential on the trade is lower. So for me, I'm not opposed to, because again, I trade intraday. So I'm not opposed to capitalizing on the volume that is currently in the market, especially on the lower time frame, but I will do it at a modified risk. So I wouldn't be, you know, full risk. I typically will go half risk and then just looking to secure most of my profits at whatever my key target is. Because for me, at any given moment, the markets can shift into a continuation of the overall trend, right? Which we've seen here is bullish. So we had this impulsive move up followed by a corrective structure and then a slightly bigger move or lower move, correction, smaller move, correction. And then we got this move here. And again, this was just indicating that, hey, look, the market is beginning to slow up here. We can just see based off of these impulsive legs that we got going up. And then price came down to take out a key area of interest low for me personally. That to me shifted the market structure for lower time frame into a corrective structure here. Now, once we actually got back above this high, and you can see the volume that came in above this high, this shifted the market structure for me on the 4-hour time frame back to being a bullish continuation rather than a corrective structure. structure. So this is kind of what I mean in terms of a corrective structure trade versus a continuation trade in the volume perspective, right? We got this move to the downside. We created this low here. We created relatively equal highs. And then we flip to being back to being bullish, right? So these corrective structures, they're oftentimes, again, short-lived and lower, slower volume in comparison to the wave that we had here. So I believe that we got another correction and then another bullish wave. Well, this, to me, this market that we're currently in is a corrective structure. And I do believe that we go back up to take out these highs up here for gold. For me, it's not a matter of if, it's more so a matter of when, and then what is going to be some of the influencing factors that drives us up, or where are some potential levels where we can see this market actually shift to being bullish. So for me, on the long term, I am bull bias on gold. And I do anticipate that we gravitate higher, but it's going to come, like, if this current weekly for me closes as a bearish weekly, that leads me to believe that we may see a steeper move to the downside next week to take out our current week lows. So that means that that correction could last a little bit longer than what we anticipate. For me personally, I was all biased for, you know, previous week highs to get taken out, which we did see happen. And then now we're starting to see a little bit of a pullback here, and where we're at on this time frame here is at a key area of resistance. So if this weekly can close bullish above this resistance here, then I do believe that we see clean price action up to, you know, areas about 4,717. But for me, it just comes down to, okay, how are we going to react here? How is this weekly going to close? And is the lower time frame going to actually confirm that for me, just showing me on my 15-minute or my 1 hour that we are in fact now being bullish? And I think that that would come with another impulsive leg to the upside, similar to what we've seen on this move here. So that's what I visualize personally.
Yeah, no, I like it. And I think that the question with gold is, and it's been like the common one, has been like, all right, you've had these big moves higher and these very minor retracements. At least the theme recently has been big push higher, consolidation without much of a larger scale pullback on like the daily chart. I'm generally still very bullish on gold, but I've been doing my best to stay patient, wait for proper pullbacks. In fact, that level that you marked up, this 4,200 level, was a huge spot. I think we had our eyes on the same thing there. Price broke, made a move higher. And for my own approach, I like to wait for a breakout retest type of entry model, and just did not get that at all. So we didn't get the pullback into support. So I've been kind of sitting on the sidelines watching gold. And I think that, you know, with hindsight in our favor, it's easy to be like, oh, you know, you shouldn't wait for the full retracement. You should just be buying the breakouts. But I think it's important, whatever your strategy, whatever your approach is, just to stick to it ultimately, because at the end of the day, sure, this time the right move was just to chase the rally. But the next time, and what I've found is in most of my setups, the ones that I want to be in do oftentimes retest the scene of the crime or the breakout point, whatever you want to call it. But I'm really curious to see if gold gets a little bit more downside here in the next few days. I am interested in maybe taking some stabs at the long side, see if I can catch some kind of continuation to this overall upward trend, because I do think, you asked earlier, you know, the U.S. Treasury stuff, generally speaking, I think that the rally can sustain itself. It can continue. We are coming off of what was a very major correction in the price of gold, going from 5,600 an ounce all the way down to 4,000, bottoming out there. And I do think that there is a sustainability here to the upside move. From a macro perspective, you know, I still like gold quite a bit. If I just pull up my my macro heat map here really quick, what we see is economic growth has generally been softer than expected for the U.S. Services PMIs, retail sales, consumer confidence. These metrics have been coming in a little light versus expectations. Though yesterday we did get GDP growth, which was previously a big miss in the advanced GDP number. The preliminary GDP number that came out yesterday came actually out in line with expectations. So that went from a bullish catalyst to gold, just a neutral one. So that is worth mentioning. You can see the date here, August 26th. Consumer confidence, that latest figure was worse than expected. That's going to be bullish for gold. Also, by the way, for my Edgefinder fans out there, we are working. You can see it's under construction right now. It's being developed or being adjusted, but we're going to actually add when new data is set to come out soon, we're going to add some kind of a parameter to put like an asterisk and change the color of it so that you know new data is right around the corner. So this data heat map is going to keep all of that stuff in check for you. But the developer we contracted the project out yesterday, so it is being worked on. So if you have Edge Miner, stay tuned on that. Should be fun. But jobs market data, the other side of things, just to finish out my thoughts here, inflation has been more modest than expected. PPI came in 4.7 versus 4.9% expected. The 2-year yield has been softer here recently. ADP numbers softer than expected. JOLTS job openings. And you guys have to remember, like from a macro perspective, generally speaking, gold wants to see lower interest rates and an economy that is wobbly, right? A weaker economy, a weaker dollar, these things are generally supportive of gold. So this adds another, layer of context beyond just the technical charts for me, adding some confluence, looking at all the economic data that I didn't handpick this for fun. This is the stuff that the Federal Reserve talks about, right? So this is the list of data set tools that, the Fed always references frequently in press conferences and in, all sorts of meetings and Fed events. These are things that are consistently being discussed. So I think gold cares about those things. I think the S&P, the Nasdaq, this is sort of the one set of data points to rule them all in my view. So keeping it really simple. I also am a little bit more on the bearish side of the dollar. You have, gold bullish setups being more prime when you have a weaker dollar. So if we can see this thing continue to pull back, I do think that both of these areas look tentatively like spots to sell the rally. Kyron, do you look at anything with the DXY? Do you ever take that into consideration when analyzing for gold or for the Nasdaq? You mentioned
so for me, they work, like you said, kind of like in not a confluence, but opposing each other, right?
Okay.
So if I am looking for gold to be bullish, I would want to see a weakening dollar on the DXY. I typically used to look at it a lot more when I was trading Forex pairs, specifically EUR USD and GBP USD. Those were like the two main assets that I used to trade. And just understanding, what is the dollar doing and where are we at? And like you said, with the 23,000 jobs that we had lost in the labor market, it is showing a slightly weakening labor market. Now, most of those jobs came from the education sector where, over summer. So that is kind of what that priced in. It wasn't like corporate America was losing jobs or people were getting laid off. It was more so in that focused in that education sector. And so, yes, we did have a slightly weakening labor market. We may see different news for NFP, I believe, this upcoming month and seeing something different as, we're getting back into that school time where people are going back to school. There may be more jobs there. But the biggest thing for me is wondering, okay, how is oil and specifically our CPI data going to affect the markets? Are we going to be looking to see, increased rates? And if inflation does continue to increase with the price of oil, and as of recent, the price of oil has not gone up a lot, right? In this previous, or at least in this week, we've actually seen oil begin to come down. But if there is no agreement or deals made, I don't see, short term or long term that oil continues to drop. I do believe that we see oil continue to go up, and that would increase, potentially energy bills, which would likely rise inflation, which means that we would see a slightly different number for CPI data than what was released last month, which then could have, a market shift if we're starting to lean more so to rate hikes than rate cuts. So for me, I'm definitely interested in what the dollar is doing. I don't actively watch the dollar in particular as much anymore as I am focused on the assets that I'm trading intraday, because most of my setups are going to be, mainly intraday setups.
Sure. Yeah, that's awesome. Kyron, I think your multi-time frame analysis is fantastic. You're also looking at multiple different charts to weigh in on what you're looking at. Gold, Nasdaq. This has been awesome. We are out of time here on this session. We got our next host here stepping in just a moment.
I appreciate it.
Where can people find you if they want to connect with you? I know you're on Instagram, you're on YouTube. What can people search to find you and connect with you further if they enjoyed your commentary?
Yeah, so for the Culture FX across all platforms on Instagram, TikTok, YouTube, and I go live every day around the same time on TikTok, just breaking down exactly what I'm looking for intraday.
Perfect. I'm just going to drop that here in the chat for people. Guys, go follow him. Let him know you were watching the stream today. Hit the like button, all that good stuff. Make sure to support anyone who comes on the stream. We greatly appreciate it. It's adding value, just sharing free stuff with the trading community. And I think it goes a long way. So Kyron, thank you very much, man, for coming on the stream. And hopefully we'll see you back soon, man.
Yeah, of course. Thank you for having me.
Thank you, man. See ya. Awesome stuff, guys. As always, again, Kyron, I followed him for years. It's just, you love to see that sort of stuff when people come on, they want to share ideas. Wonderful commentary. I love the way he breaks down his charts. And the circles concept, man, I like that. That priority, that theme, love it. Guys, our next show host is coming on here. It is Miko Audu. Of course, he is talking trade setups. He is primarily a technical analysis trader, although he does mix in all sorts of other things here with his various tools that he builds. Telegram is really cool. But anyways, if you guys are interested, by the way, before we throw that over, in joining our VIP group, it is currently 40% off. If you want to get access to all the trade alerts being shared, message here. We're doing payment plans. We're doing live stream discounts, extra ones for regular subscribers here. So don't miss out on that before it ends. That is just going to be a short-term offer that we're doing to get people to come join us inside of the VIP Discord. With that said, guys, up next, we have Miko Audu taking over the stream. Don't go anywhere. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
What's up, guys? Hope everyone is doing good. Glad to be back on the live stream. As always, I'll go through a bunch of different markets. Some I'm looking at, some which I'm interested in maybe next week or maybe September-wise. If there's any particular interest you guys have, feel free to stick it in the chat. More than happy to take a look. Different time frames, I'm more than happy to take a look as well. And of course, crypto, indices, Forex, let me know. Good to see some familiar faces in the chat. Hope everyone is doing good. What's up, Bashi? What's up, Ball Out? Hope you're doing good. I appreciate that, man. But yeah, I do have a position live at the moment. I do have some longs on the Nasdaq, which is moving okay. Seen a bit of upside recently, especially kind of we had a bit of a gap coming into today's price action, which kind of went in my favor a little bit. But we do have some resistance to our left, which is kind of capping us right now. I think if we can break through that, then the trade can really get going. But Nasdaq has been an interest for mine for quite some time because we had the big pullback, we had all the indices falling, and then we had a massive move 2-3 weeks back, really strong move. Dow Jones, S&P, they all were soaring, new all-time highs. We went even further. Nasdaq was lagging behind. So a very kind of common trade I do take on the indices, which is kind of the catch up or the lag type opportunity. Basically, if majority of the indices correlated to the index you're looking to trade is creating all-time highs, looking very, very bullish, then typically you're going to expect all of them to create new highs to continue in that trend. Of course, they will have their certain kind of limits or certain kind of reasons why people are more attracted to another index than another, but typically because of their correlation, you do expect them to move in the same direction and do similar things. So in terms of the Nasdaq, I'm expecting price to get back to the all-time highs. So the trade is essentially betting on that to happen. And if we do take a look at the US 30, which I know has kind of had a bit of a pullback since then, so you can see this is the move that got us to the new all-time highs a few weeks back. Since then, we've had a bit of a correction. The S&P, same situation there as well. Really nice move, had a bit of a correction. So I'm expecting Nasdaq to kind of make that catch up, kind of fill that gap to speak. So I've been keeping an eye on it. I was very, very bullish last week. We had a deeper retracement than anticipated. I was actually looking to buy off this zone here. But yeah, it didn't really provide much support. Price broke through a couple of candles there. Didn't give me much of a chance to buy in. And I said last week, on the show that I was looking to see if I can buy here. And I said, I don't really want to see price break through this zone. If it does break through that, maybe I'll stand corrected. Maybe NASDAQ is going back to these lows and maybe further. But if we can hold into that zone, I'm interested for some buys. So I did manage to take a buy. It was Tuesday. I originally had my stops a little bit further down. My stop loss was about here. But because we have seen some movement in my favor, I have managed to trail stops a little bit underneath that low. So minimizing risk a little bit. But yeah, we'll see how this position goes. I'm hoping to add to the trade, really. When I look to trade the indices, it's all about kind of betting on that continuation of the bigger trend. I'm always looking to see if I can add to it, because if I am right, I want to make the most out of that. It's not like currencies where it's all about kind of positioning, really, because you don't really have that typical trend of currencies. It's kind of, we'll trend for a little bit, then it's over, then we'll go through a new spell. The indices, especially the US indices, I'm always looking for that continuation back to highs. So I want to try and maximize that, especially when we're underwater like this. So yeah, NASDAQ looking okay. If we can clear this kind of area, that's hopefully where we can see some momentum pick up and add to the trade. If we do come back down, I'll take the loss. It is minimized, but there's no need for me to stay in the trade if we're going to start pushing back to lows again. So I'll give it a bit of room, but let's see what happens. But that's the only position that I have on at the moment. I've been keeping an eye on USD pairs. That's always my interest when I'm trading currencies. I like the majors. That's where I trade the most. I do keep an eye on pretty much all major and minor currency pairs, but those are my most traded. I'm not really seeing much opportunities on the USD pairs right now. Euro USD, we're kind of floating in the middle of nowhere right now. I've had my eye on this area in particular, and yeah, we're just not testing that zone. So I don't really see much opportunity until price gets there. We don't necessarily need to. Maybe price has pulled back enough. Maybe we're going to put another low and a push back to the highs there, but I'm always looking for price to pull back into structure before I look to place my entries. But I do like Euro USD longs. It's just, I need a deeper pullback, and I'm not too sure if we'll get it. We'll look really corrective right now. We might just see a push higher. And if I take a look at the DXY, which is always good in terms of just kind of confluence and see where the dollar is doing in general. Yeah, DXY's had a slightly deeper retracement, almost actually testing this area, which correlates to the level we just spoke about on Euro. So DXY may see a bit more upside. The pullback might be over. Price is not necessarily perfect. Doesn't always have to test certain areas to the pip. So we may have pulled back enough. It does look like we're corrective. I'm not looking for anything major though with the USD pairs, because of course we've seen a lot of downside the past few weeks here, and we are coming into some major areas of support on the higher time frames, which I'm not too sure if price is going to break through or not. So although we are bearish, we've been trending lower, I'm not looking to take it much further than back to the prior low. My longer term bias of USD is very much on pause. I don't really have a long term outlook just yet. I mean, I did when we had this range here and price broke out. Then I was looking for price to continue higher, but we failed at highs, then we came back inside. So that went completely out the window. And now we're seeing some downside back into the middle of the range where it's a bit more ambiguous, a bit more difficult, especially when looking at the technicals to kind of forecast a bit more longer term. So I'm just kind of taking it week by week, really, with the dollar. And same with kind of USD related pairs. I mean, I'll take a look at pound USD, which is, again, a little bit choppy. Well, very, very choppy, actually. It's back at resistance, back at highs. We're rejecting that area. Maybe there's a bit of downside, but I'm not really interested, to be honest. I'm always looking for momentum, always looking to try and flow with the trend. So when currencies are kind of chopping very, very hard, it's either I'm shorting right at the high or buying right at the low, or I'm pretty much leaving the market alone until I see momentum pick up. So I'm being very cautious with USD and everything. Everything in that kind of area. I'll take a look at gold GG. I'm seeing that requested as well. I appreciate the comments, guys. What's up, Yoshi? Hope you're well. Okay, I can take a look at pound USD as well, no problem. I'll go through gold first, and then we'll take a look at pound USD a bit more intraday. Of course, any other requests, stick in the chat. More than happy to take a look. Gold, I've been looking to buy, but it's just been a bit awkward. And to be honest, I'm no longer looking to buy. Not because I don't see more upside, just because of where we're trading. And I think I think the bulk of the opportunity has kind of gone. And the reason I say that is because really the opportunity for me was price in this area, because you've got price at lows. You can see we had a similar situation back over here. We had a prior low, price wicked through that, and then that kind of gave us the catalyst for the pullback. We had essentially the same pattern here as well. So that's our prior low, just kind of taking it across there. You can see price drops below, consolidates, and see that initial strength there. That for me is the opportunity to trade the pullback, trade the upside. Now, in my eyes, we've kind of had the bulk of the pullback. Maybe price has got more upside. Maybe we're going to break through this. Maybe we're going to explode to all-time highs. But I can't be confident with that, especially when price is finding resistance, in these type of territories, because if we look to our left, these are where lower highs have been coming in. Who's to say that is not going to be another lower high? So I don't really feel comfortable buying in this area, because this is, for me, more bearish territory. If I was looking for shorts, this would be a prime place for it. If I was looking for something like that, it makes absolute sense with the structure we're seeing. For me to be a lot more confident with the buys, I need to see price do something like this through the high there. Then the next pullback becomes pretty sensible, and maybe we are going to push the all-time highs, and that is still probably maybe a couple of weeks away if that's going to happen. Or we push back to these lows again, and then things, that was a very squiggly line, and then things get interesting again, and we can take some buys there. This is more from a swing bias, by the way. If I go a bit more intraday, there might be some shorts opening up because of where we're trading. I would wait for a bit more momentum because this looks really, really corrective. If I drop to an hour chart, how are we looking? Yeah, really corrective. I would like to see a bit more strength from the sellers to show me that, okay, momentum's really picked up and we could probably see a bit more downside. This is a really nice range consolidation, which gave us our last bullish move. This could be a bit of a draw or an attraction for price, especially if we have a deeper pullback. Even this zone here as well could be of an interest for price to pull back towards. So there could be some very intraday short opportunities here for gold, but I just want to see a bit more strength from the sellers. This is all very corrective. And typically when we're seeing corrective price action, it's normally a pullback for price to go higher. So I want to see a bit more strength and take the pullback of that. And these would be the targets I would be shorting to, but I'm not really interested in intraday trades on gold at the moment. So yeah, I kind of missed the buys. We've seen a lot of upside here. I would like to be in this leg here, and I'm not. And now that price is kind of coming back to these areas, I kind of say that the move is not over, but the move that I want to trade is over. So until these highs start to go, then I can expect another continuation, and that's the next move I'll try and look to trade if I can. But yeah, gold, I'm anticipating a bit of a pullback. These are the areas I'm looking at, and then after that, we'll see what happens. Maybe price bounces, maybe we see a lot more downside. I'm not forecasting too much right now with gold in terms of the price action. Pound USD, I'll go a bit more intraday because I had a look at the 4 hour just then. So someone mentioned pullback for pound. It could be. Have we tested this zone to our left? Just about. So yeah, I mean, it goes back to my previous point. I like to take pullbacks. I like to follow momentum. I like to follow trends. And a big part of that is just finding quality, because if you really want to find a trend or bullish structure or bearish structure, it's very easy to find in the market. It's abundant. The trick is finding quality opportunities, really. That's essentially where you want to put your focus, because if you're looking for a pullback, you can technically find a pullback anywhere. But is it worth your capital? Is it worth your time? Is it worth your energy? Not all the time. It's the quality opportunities, and that normally comes down to location, comes down to strength, and how the market is pulled back, and also the location it's pulled back into. Those are mainly the things I'm looking at when I'm gauging the quality of a trade. And I like the pullback. I like the location of where we'll pull back into, but the higher time frame context is just a little bit doesn't agree, because we're just going to smash into a pretty big level there in the daily chart. So I don't want to buy the pullback off that. I'd rather wait for price to break through this and then buy the pullback of that. That for me makes so much more sense. And I've got kind of a clear target to our left there at 1.385. So this makes a lot more opportunity. Doesn't guarantee it's going to work out. That could still very much be a losing trade, but this the logic checks out. in terms of where you're buying to and where you're buying from as well. Buying into this, you're asking for a little bit of trouble. Doesn't mean the trade won't work out, but I wouldn't be totally surprised just looking at how the market's been moving as of late. We could very much see something like this happen. Of course, we're going to need to see a lot of weakness in the pound, a lot of strength in the dollar for that to happen. But looking at the technicals, a move back down to support here is pretty reasonable. So I don't really want to be finding buys up here unless you're going to be very intraday in and out within the session sort of thing. Then yeah, you can get away with that. But anything more, you're kind of betting on price breaking through that level or maybe getting to that level, but I just don't think it's the best location. So yeah, sure, it's a nice area we're testing right now. Oh, didn't mean to do that. It's a nice area we're testing right now, but I just don't think it's the best trade. I'd rather wait for that pullback and then try and find the opportunity. So hopefully that makes sense. I think Aussie dollar is a slightly better trade based on the location, because if you look at Aussie dollar for me, the next big target would be up here, 0.72680, and we do have a little bit of resistance in fairness to our left here, but it's not as significant as what we just saw on pound USD. So I think this is a slightly better trade just because we're not buying to such a strong level of resistance. And if USD is going to be weak, we should see Aussie dollar push up as well. The only thing I don't like about Aussie dollar is that this leg has continued for quite a while. I don't like buying too late into a bullish leg. This is primarily when I'm talking about currencies, really. I always kind of like to get in, not necessarily early, but maybe the second or third pullback is really where I want to position myself. Yeah, anything later, I kind of be a bit cautious. I don't necessarily invalidate it, but I want to be cautious with those type of trades just because currencies in general, they're going to fluctuate. Trends are not always as clean. Deep pullbacks are common. So it's all about really kind of getting in fairly early to the party, or waiting for price to kind of break through big levels and then looking for the pullbacks after. Those are good opportunities as well. But yeah, I think Aussie dollar is a slightly better opportunity just because we've got a bit of distance to the next big level. Maybe if momentum can pick up, then we can find some pullbacks afterwards. This could be a nice little zone to keep an eye on. It really depends, to be honest, because yeah, this is quite corrected. But yeah, if we can see some strength, I think the pullbacks there look good. But in terms of direction and the opportunity, buys make a lot of sense. We're seeing higher highs on the higher time frames. We've been bullish for quite a while, and intraday is pointing the same direction as well. So I don't really see much kind of what's the word I'm looking for? Much kind of opposing strength from sellers. It looks very, very bullish to me. So expecting a lot more downside there, a lot more upside there as well. I'll take a look at some of the crypto markets because we've seen a lot of big moves there, and I do want to speak about that. So I am getting very, very I'm starting to gear up to some opportunities on the crypto because I think this could be a bit of a bottom potentially. Bitcoin not quite there yet. I do want to see this high taken out before I do get really excited and start looking for opportunities. But if we can take out that high with some strength, yeah, I'm looking for some plays for BTC. And I'm not really looking for like a day trade or even it's still technically a swing trade, but I'm looking to see if I can take it back to the highs here, 120, maybe beyond that as well. So I am very interested in BTC. Ethereum, I like as well, but I'm just going to trade one of them. There's no need to try and force both of them. Ethereum is just about clipped the high, although I do want a stronger break. You can see here with this weekly candle from last week, we just about closed underneath. We technically did break structure on lower time frames, but on the week's candle, it kind of closed with a wick there, which is a slight red flag. But if the next candle closes with some strength, the red flag's over. But yeah, I do like the location of everything. You can see where Ethereum is rejecting. This is the last low, which gave us the last all-time high. So if I draw this and drag that across, you can see we just about pinched the all-time high. So this is a very, very significant support level, or just the area in general for Ethereum. So the fact that we're seeing a lot of strength from it, which I think is the key thing, because there's one thing getting to that level, there's another thing seeing a reaction and a meaningful one as well. So if we can see this reaction persist, then for me, it's just about pullbacks, maybe a retest of that structure. We'll kind of see as we go along. And that's the opportunity I'm looking for. Again, whether we get the full swing or not, I'm not too concerned, because the real attraction with this opportunity is the risk to reward and also the speed, because you're not going to get a risk to reward like this on a currency pair, or even, I mean, pretty much any other market really. That's the unique thing about the cryptocurrencies. You can get big moves very, very quickly. So that's the real attraction there. So Ethereum, keep an eye. BTC, I'm keeping an eye as well. Like I said, not quite there yet. Just if we can go and break that high, and then pretty much the exact same setup, really. Break the high, wrong tool. There we go. Break the high, pull back, and then there's your buy. I probably look for entries maybe on the daily, maybe if I can the full hour. But I think a key aspect of this is giving myself enough room with the stop loss, because I might take some heat. It might consolidate a little bit on me as well. I'm not expecting this just to blast straight in my favor. I mean, if it does, great, but I'm not expecting that. So I want to give myself a bit of room. So I might take this on a slightly higher time frame, like a daily chart. But the rest of all looks still very favorable. This is the weekly. If we drop to the daily, you know, you can imagine what a trade like that could look like. Very optimistic, but the opportunity is there. So going to keep a very close eye on the cryptocurrencies. Elsewhere, I don't really have too much, really, to be honest. It's been very quiet. I've been traveling as well, so I haven't been as active as I want to be this month. But if I can find some opportunities on some pullbacks with Euro, then I think that'll probably be the opportunity I'll probably focus on. If not the end of this week, likely the start of next week. I think this looks the clearest opportunity. Unlike pound USD, we don't really have a major level of resistance until we kind of get back to 1.18. So there's a bit of room for Euro to move into. But then again, I'll probably just look to take it back to highs and keep it very, very simple. No need to be too aggressive with this one as well. But I like the strength we've seen. Yeah, I like the strength we've seen, and the pullback looks really healthy. Maybe this is the low. Maybe we do push on from there. But again, it doesn't quite fit my plans in terms of criteria, in terms of what I'm looking to do yet. So hopefully get some pullbacks and get some entries there for next week. But really, for me, it's just about managing the Nasdaq, hopefully adding to the position, because that's really how I want to take advantage of it. The original risk reward on this was a little bit over a 4-to-1. I think it was like 4.2 or something. From where I originally had my stop loss, which was back down here. So I want to see if I can add to that and take this closer to maybe a 6, 7, 8, and really take advantage of the opportunity. And in terms of where I'm looking to take some profits, I'll be patient. I'll wait for us to get back to this zone if we can. I think once we take this high here, I'll start trailing. It depends how we break it, but at that point, I'm relatively safe, so I want to start trading stops. But this is where I'll lock in some gains. And then, yeah, this is where I want to take the bulk of it. And then we'll see where we go from there, because if I can trail beyond that, that'll be very nice as well, because I'm positioned well just to kind of hold the trade as much as possible. I was keeping an eye on US 30 as well, because that, of course, has had a pullback too. But I don't like how he just closed down the 4-hour chart. If we can break above that zone 53,700, I think this could be a very, very nice opportunity, especially if we do that with some strength. Because my main focus this week for US 30 was the break of this counter trend line, and we got that. It's just we haven't really seen much strength since that's happened, and this level of resistance has proven to be quite strong. But if that can break, I don't really see any other obstacles in the way of US 30 from getting back to prior all-time highs here. So if that can break, for me, this looks like a no-brainer of a trade. Not saying it's gonna guarantee to play out, but just in terms of ticking the boxes, clear structure, momentum's in your favor, no significant opposing market structure in your favor. And the trend is on the higher time frame still pretty clean, still pretty strong as well. So the likelihood is that we do get back to all-time highs. And then maybe US 500 might pick up, but I think US 30 looks a little bit cleaner. Yeah, I like the S&P to break this. If we can break through that, then yeah, we're looking pretty good. I think US 30 might give me a slightly bigger risk reward. So I quite like the indices. I'm not seeing much on other currencies. I mean, some of the miners have been moving interesting. The yen pairs have been interesting as well. I'm keeping an eye on USD JPY, but it's just been very slow this week. I don't know if it's waiting for some news to get going or what the deal is. We do have some structure here, which is proving to be pretty sturdy. I'm kind of hoping we can pick up some momentum, because if you look at the other yen pairs like Euro yen, pound yen, CAD yen, Aussie yen, New Zealand yen, they're all kind of back to the highs of where they had that big drop when we had that big kind of intervention. And I'm expecting dollar yen to probably make a similar move. You can see this in New Zealand yen. We're back at the same area. This is where all that strength came in. We're back there again. USD JPY and I think Swiss JPY as well. Probably the two yen pairs which are lagging behind severely. So maybe there's a bit of a catch-up opportunity here. Same kind of theory with the Nasdaq as well. But yeah, price action is so flat, and I don't really see much opportunity. So if we can build some structure up nicely, there could be some nice trades. But again, maybe that's something to look in for September. At the moment, it's a little bit dry. But yeah, guys, we have run out of time. I do appreciate each and every one of you tuning in, and of course, Nick and the team having me on the stream. If you have found it useful, feel free to check out my channel. A lot more similar content there. But guys, have a great trading week. Have a great weekend, and I'll see you on the next one. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Just like the advertisement said, if you can go ahead and join the Telegram channel, I would be very grateful. It is completely free for you to do so. Free value for you, markups, polls, promos, codes, all that good stuff, all waiting for you there on the Telegram channel. Guys, hope you guys are having a great one. Bashy, man, good morning to you, or good afternoon. I saw you in the chat earlier. Wanted to say hi to you here. Good to have you back, man. We've missed you, man. It's good to have all the regulars here all the time. That is like one of the best parts about doing this live stream, is like just talking to the same people every day, seeing how they're doing. That is honestly one of the fun parts, especially because I'm working here remote, right? So you guys are like my colleagues for a change, right? So you guys are like my colleagues. So I love that. And also, guys, wanted to say that I am so stoked right now. I have brewed this morning one of the best coffees literally I've ever had. Like, I am on a high right now, guys. Like, no one right now is sipping a cup of coffee as good as mine right now. Like, I can die on that hill. So what a great morning today is going to be. As far as the economic development side of things, don't really see nothing going on, though I am seeing a switch in movement there on DXY. So we had a green DXY. Now we're starting to see some rollover. I don't know what that could have been, but let's go ahead and see. Let's see if we can find what that catalyst could be, if there is one. If not, then cool. We just have if there's no catalyst, then you just have a simple kind of just buyer stepping in to take this lower on this retracement that we've been seeing on DXY. So let's see here. Nothing really. Was it jobless claims? No, that was actually good for the US. Slightly lower than expected. Let's see. Yeah, I don't see anything, guys, here. Especially here, like no negotiations happening. I would imagine that's bullish for dollar, right? Jobless claims came in better than expected. Okay, so it seems like just sellers are stepping in on DXY here as we hit key retracement levels. So for example, if I go to a daily time frame here, and I measure this move out here on DXY, if I put a fib from the high to the low, we basically tapped in this morning to the 38.2% retracement level. So right over here, adapt into it, right? Also with that 200-day moving average, and likely we have a continuation lower. So yeah, let's see what's going on there. Dollar down, euro dollars up on the day, also reacting off of that key level there, that support level, also that 200-day moving average. That is the 38.2% retracement level right there. Let's check the bonds here, like Bashi mentioned. Bonds, what are they doing? Still bid up there. The long end of the curve, which has been the more influential one, is still green on the day. Again, guys, I am watching this level right here, 5150. If this level of support here on the yield, the long end gets taken out, then likely we see another leg lower. And that would, of course, help fuel the trades that we're in. 10-year, what is 10-year doing? Still flat. And the 2 years still kind of hanging out there as well. So, yeah, it really just seems like regular old price action is just doing its thing. There's really no catalyst behind it really driving price. Also, too, you have gold here continuing lower, which is going to be good. Yeah, we're getting very, very close to those key levels. So I actually like to see this. So dollar down, gold is lower here today. I'm looking at the 38.2 or the 50. They're pretty close to each other. So whichever one whichever I feel comfortable with. Ideally, if we tap into this 200-day simple moving average and you see buyer step in here, that to me is a good sign for a continuation higher. Now, with gold, let me say this, because I know all of us have been watching gold. We're mindful of it. We're asking questions like, when do you buy? When do you sell? Et cetera, et cetera. What's the bias? I like gold to the upside, right? I do like that. And let's say we get a pullback into the 38.2 or the 50. The question is not like, okay, are you buying that? Most likely I am buying that. But I really want to emphasize here is my size for the trade is going to be a lot less than what it was when I bought here at 4,000. Okay. When I bought at 4,000, my downside potential was very well defined and somewhat limited. Okay. So when I bought at 4,000 right here, my kind of stop out level was right here at 3,800, right below this level of support, this big level here. The case is not the same anymore. So if you were to buy gold, myself included, right here at the 38.2 or the 50, you have this much downward potential, right? A lot more than that original one that I had. So with that, my sizing for the position would be way lower than it was when I entered here, just because I'm buying with price way above here. So that's something that I wanted to make sure that I address. Yes, I want to be a buyer of gold, but just because we're getting a pullback doesn't mean that I go all in on it and just add so much to the size, right? That's definitely not what I'm looking to do. And I would really suggest against that. Besides that, though, nothing else is really on the radar. Silver's pulling back as well. So depending on your preference, you could justify that this silver pullback into this level of resistance probably turn support could be good for the upside as well. Me personally, I just like gold. Let's see. Simo says, Alan, the 45.40 zone at 44.50 on CFDs. If you trade CFDs, it's a zone to watch. All right, let's see. 44. Let's see what you're looking at, man. 40. What is it? 45.40, which is already over here, which is the 30.2, give or take, or the 44.50. 44.50. Okay, so you're basically highlighting CMO, which is this 38.2 and the 61.8. Right now, this chart here is not probably accurate enough, but it's pretty much ballpark in that area. So yeah, you're pretty solid on the ball too, right? So I'm looking for a pullback into this general area, whether it be the 38.2, the 50, the 61.8. I want to pull back and also want for price to start bouncing up higher. That will tell me that, buyers are stepping in to take it higher, right? I don't know which one it's going to be, but that's what I want to see from a price action perspective. Also, too, I just want to see that this 200-day moving average does hold up nicely as dynamic support. But yeah, I like the trade. So that's what I'm looking for, guys. Patiently waiting. Everything else is starting to work out here just a little bit. So DXY is rejecting that level of resistance. So I do like to see that with no given catalyst, which is odd, but it's probably just regular price action. Other than that, what is Nasdaq doing? Nasdaq's flat pretty much. Someone said check pound dollar. Pound dollar, I would imagine. I see this structure right here, right? So this one on my left. So maybe a pullback into here. I found some support, take it higher. With the pound, though, it's been a very strong chart. I'm kind of looking for, or I would look for, I should say, for a break and retest and continuation higher. So that's kind of what I'm looking for here. You had an attempt at that already. It failed. So you had a pullback on that. So you had the attempt right here. It failed, pulled back. So I really want to see a break, retest, continuation higher with some follow through. And then at that point, from target perspective, 1.39 would be kind of what I'm looking for as well. Aussie dollar, you guys know this. I'm liking that. I don't want to jump the gun though. I need either a pullback or a break and retest. It's as simple as that. But really, guys, I think I covered it all. Let's see. Yeah, gold I'm waiting for. Let's see what our yields are doing. It's still hanging out there. We'll see what happens. Yeah, guys, that's pretty much it. I'll have to circle back with you guys if I see something new, but if I don't, it's like a dollar yen here, holding off this level as resistance. Looks quite well. This one's tricky, guys. This one's tricky. This kind of looks like a flag pattern, right? Maybe if you have a breakout here, you could see another leg lower on dollar yen. Maybe looking good. How's the CAD trade? Let's look at CAD, right? Dollar CAD. Dollar CAD right here. It is in drawdown, $215 here, but we are starting to see a rejection there. I have my stop loss above this structure, or in the structure right here. I'm looking for a reject of this general area here, which it seems like we are getting. All of my trades here are pretty much kind of near flat. So if you look at dollar Swiss here, this one's also, I entered here at the 38.2% retracement level. We got to the 50, which is okay. Again, as long as we don't breach the 61.8 and change that, then I'm good to go. So same thing with euro dollar as well, right? I bought in at the, or not bought in at the 38.2. I actually got here prematurely, but we're seeing a reject of the 38.2. If we continue to trade higher, then that's good. So I'm basically correlated short dollar, right? That's basically what I'm doing here. I'm short DXY, right? I'm short this chart right here. I'm looking for a bearish reaction off of any of these key retracement levels. That's how I'm positioned, and I'm trading it to the downside. And I'm doing that by going long euro dollar, short dollar Swiss, short dollar CAD. Check out Brent crude oil daily chart. Wedge breakout retest completed. Are you talking for a breakout to the upside, philosopher? Let's look at Brent. Brent crude Brent looks different. Now that is very different from what you see on US oil. With US oil, you have the price of oil staying below the trend line versus on Brent, you have a breakout and a sustained move higher. So let's see. Maybe you see kind of like this going on, right? Some flat price action. We'll see. Missed the entry on UCAD by a little. I don't think it's too late, man. It's just, I mean, I don't think it's too late with dollar CAD. I mean, right now I am in drawdown, so you'd be getting a better price than I would have been, with dollar CAD. I think from a technical analysis perspective, let me go to this chart because it's cleaner, right? Any shorts within here, as long as your stop is above this structure, which was previous resistance, possibly holding itself, I think that's pretty solid. And then I target 1.370 and then beyond that further. So don't think it was, I mean, again, like I said, if you were to short dollar CAD, assuming right now you'd have a better price than me. Are Nasdaq long still valid today? Maybe, man. So with Nasdaq, you have this going on. You have this breakout level. So this was a bearish trend line here that was holding up quite nicely. You broke out of it. You have stayed above it. You had a pullback into this level, not quite to this level of support, but pretty close to it. And now you're seeing a bit up higher. I would say, let me go to the Edge Finder real quick and see what's going on with Nasdaq. Nasdaq Edge Finder refresh. Are we seeing anything bullish? Let's see. I'm just gonna type it in. It's neutral right now. So no, I would say no. I would say no. But also too, you have to remember, I am a swing trader. So for me, I am waiting for pullbacks and like swing trades, right? I'm trying to catch bigger moves. Don't know what your process is. I don't know if you're an intraday or if you're a scalper. In that case, maybe you want to trade this. I don't know. I don't know. Let's see. Let's see. Other question: where are the circles? So on DXY. By the way, I love that concept of like, you know, having some circles more holding more weight than others. It was funny. I think it was a joke at first, and we just ran with it. But this is kind of the level that I'm looking at, right? So the circle on DXY would be 99.6 to 99.2. That's because you have key fib levels within that area. You have the 200-day within that area. You also have previous support, possibly turn resistance in that area. So many technical confluences in this cluster of price that to me, this would be a circle of this magnitude, right? Like many, many circles. This to me is like, that's like the DXY kind of level of resistance. And I say that because there's just so many layers of technical boundaries there. You have the 200-day, again, all of those things right there. So if it does hold quite nicely, I wouldn't be surprised if the bulls take over, right? And if you see price get back to 99.8, then that means they overcame the 200, they overcame key fib levels, and they overcame this support turn resistance. In that case, I would question the kind of integrity of this downward trend. Yeah. So that's kind of what I'm looking for. But right now, it seems like price action is holding on DXY. Hopefully, we have a cleaner candle to the downside and it rejects it. Simo, you're funny, man. Alan, your course, I don't like it. You don't have more circles. You know, well, it's non-refundable. So you snooze, you lose, man. Thank you for the $65,000. I appreciate it. And hopefully get some value out of it to recoup the investment. But it is mine, man. I am off to the sunset, brother. Just a joke, by the way, for anyone that's watching. That probably just joined like 30 seconds ago. This is all a joke. So please, that is not real. We're just trading here for free. Everything that we're doing here on the live stream, all of everything that we're talking about, everything like that, completely free. You just sit tight, relax, watch the stream, and enjoy the show. Do a chargeback, Marco. You're not supposed to. I thought you were on my side, man. I thought we split the profit 50-50. I'm gonna have to cut you out of the deal, bro. That's not how it works. That's not how it works. See, paid by Bitcoin. Yeah, good luck getting it, man. Yeah, Marco sold out, bro. He sold out. Marco's gonna teleport in here in a second. There he is. Called it.
Yo.
Or good afternoon.
Hello. Yeah, I'm sorry I revealed the chargeback technique, but if they paid by Bitcoin, then they're screwed. So you got them.
The chargeback technique is so clutch. so clutch.
I actually used it for my Forex funds. If you remember, like my Forex funds was the biggest prop firm, I think in 2022 or 23, and they got shut down by the Canadian authorities after the main guy bought like a Bugatti or something like that.
Really?
Yeah. And then I managed to do a chargeback because thankfully I paid by credit card, so I actually got the money back. That's why prop firms want you to pay by crypto, because you can't do a chargeback. So always make sure you use a credit card. If all goes south, you can always get your money back with like Visa or MasterCard. They will take care of you in most cases. If you have like a good explanation, then you're gonna get the money back.
Yeah, I love that, man. Like, you know, sometimes if I just don't receive services or whatever, just not up to par, like, it's not even worth arguing with the merchant. You know, it's like, you know what, enjoy your day. I'm gonna charge it back, and I'm gonna recoup my money, and you know, there's no need to fight. I love that. I love that. Marco, what are you looking at today, man? I would say there's really not much happening, but you are starting to see dollar. This is a very marginal change on price action, but DXY in the recent times starting to flip a little bit red. You're starting to see some follow through and downside on all the major pairs. Euro dollar's up. The Nasdaq, Nvidia, home run once again. Do you think Nasdaq has more room to continue? What are you looking at this morning, man?
That's a good point. Nvidia big beat on earnings. I just want to show you one chart on my end. Don't switch the screen just yet. Give me 1 second because I'm going to open up my email and there's sensitive things in there. So let's open it up here. Okay, got it. So this is what I wanted to show you. If we go to my screen. So essentially, this is what happens after an earnings update, the blue line on Nvidia, and the red line is what happens after a down earnings day. You can see if like the earnings come in negative or worse than the forecast, you can actually sell Nvidia and make some pretty good money in the next 7 days. But if the earnings are a beat, the returns are not so great in the upcoming few days. You know, mostly kind of break even, a little bit positive, yes, but kind of break even, which makes sense because I guess a lot of people front run the thing and prepare for possible good earnings. So most of the move has already happened. That's why I think we get some sideways price action on Nvidia. So if I put it up here in Nvidia, and we may even like go down a bit and maybe fill up some of this gap. Also, I noticed I saw a post on X that analyzed what happens with the SPY after Nvidia has a big beat on earnings and the SPY gaps up. Most of the time the gap is filled. So the day ends up being red, like in most cases. That's the data. So Nvidia probably goes sideways next few days. The SPY probably goes red and maybe fills some of that gap. So that's what I have. What do you think?
I mean, Nvidia, man, they just, they keep doing well, right? They keep beating earnings. And so, yeah, that seems to be the case, like you mentioned on that chart, where you front run the idea that they're going to do well, right? That's the expectation. And so when they do end up doing well, I mean, everyone has already made the bet already. So there's really no price action after that, right? Like it is what it is. So that just kind of shows you that the risk is more like to the downside, right? Like that chart right there is highlighting crowded positioning, right? When you have everyone betting on a certain outcome, at one point, like all it takes is one disruption for the risk to the downside to get amplified, right? So it shows you that if they beat, really nothing happens. But if they miss, then that's where you see the big slide. So that's what you're seeing, man. And I would say that kind of translates to the whole AI trade as a whole, right? You have so much optimism getting piled into it, so much leverage, so much everything. That's the expectation. And I feel like, and I'm sure most of you guys would agree, that the second that the expectation is no longer met, or you start to see something different, then you will start to see that the bottom half of that chart that you showed me, where all the risk to the downside starts to get realized.
Yep. Well, it's kind of it's a bit sad that we have to talk about Nvidia, and we're mostly like Forex traders. So in Forex, there's just nothing happening. The volatility is super low at the moment. It is great if you want to trade options. So with options, you can actually bet on, or you can sell volatility. So essentially, if the volatility stays low, if like euro dollar stays around the current mark, you can make some good earnings on that, or you can collect premium, I believe. So for option traders, this may be a good environment. For me personally, my account is definitely too small to do options, and my prop accounts do not offer them. So for me, I'm going to have to wait for some directional plays. I'm still sticking to the mostly bearish USD team. What's your take on the Jackson Hole? I think we're getting the schedule in 12 hours. So the schedule will tell us the speakers, the topic of the speakers, I believe, as well. So that should give us a bit more clarity around the forward guidance. And it used to be like a big thing. Jackson Hole used to be even more important than the actual Fed decision, because they gave out quite a lot of forward guidance on those meetings.
It's usually like the turning point. Like if a central bank or if the Fed is hawkish, right, and they make a flip, if they flip flop, it'll be discussed on Jackson Hole. Like it's usually a good turning point. Which, Marco, the Fed has been kind of like trying to flip dovish at any chance they get, right? So does Jackson Hole come out? Was that the turning point for them where they can start to say, well, you know what? Oil prices have been tamed. You have inflation coming lower. We're going to try to be dovish, right? That I don't know if that's going to be the case or not. I really kind of don't have expectations, like big expectations for Jackson Hole. I'm just going to take it for what it is. Also, just because you have Worst trying to give no forward guidance. So maybe we do get nothing out of it. So I don't want to have my expectations sky high saying that we're going to have this whole shift in narrative and then we end up getting nothing. So that's kind of my thoughts on Jackson Hole. We'll see what happens. It's also going to be happening. One of the days is on the weekend as well. So market's going to be closed anyway. So it'll be hard to trade that. But to your point, you kind of have to make directional calls here. And with FX has been quite silent. Now, I was positioned for this right here. So when this down move happened in the dollar, I was positioned for that. I took my profits. We got the pullback here. And again, we're starting to see dollar kind of react on that. So I am positioned again here for another potential slide lower. That's kind of the only directional call that I have. Besides that, waiting on gold, which gold could be giving us the pullback opportunity, honestly. So you're seeing it getting very, very close to that 38.2. We'll see what happens there. If we get to the 200-day, which is right near the 50, even better. I just want to see buyers step in and take it higher, where I go ahead and buy some gold and re-enter on potentially another leg higher. That's pretty much it. So I have dollar shorts here, waiting for gold long. Other than that, there's really nothing to do, man. There's really nothing to do.
Agreed. I saw a headline on Financial Juice. Just wanted to comment on it briefly. So let me put my screen. Let's go to Financial Juice. Let's go to market moving. So you got this. Putin said to plan Ukraine escalation, seeing talks fruitless. I just wanted to comment on that. Like, I'm not an expert on the topic at all, but one thing that I know is when a leader of a war is going to escalate, he's not going to tell that to the press. He's not going to go ahead and make a post on X. So usually when they want to escalate, like when Putin first invaded Ukraine, they first assembled forces on the actual border without telling anyone nothing, and then they invaded without any news. Trump, I think, kind of did the same when he initially attacked Iran. It was like out of the blue. Well, you saw forces assembling in the Middle East and near the Strait, but there was no news about it, or Trump didn't make any posts. So if they actually want to attack or escalate, you're not going to see it on Financial Juice. You'll see it after the fact. Just wanted to comment on it briefly because maybe some of you guys are looking to trade these headlines. They're not tradable headlines. They're actually maybe even a sign that they don't really want to escalate. So they're trying to escalate without risking anything, just by saying we're going to escalate. That's classic Trump. You know, he blabs something and then he expects a market reaction without any action, just pure words. Just wanted to put that out there.
Verbal intervention. KDX said this funny. Putin's taking a page out of Trump's book now. Do we have a Paco? Putin always checks out. That's funny. Yeah, I don't know, man. That war's been going on forever. It's kind of like on the back of everyone's mind. I think the bigger, more important one is kind of the Trader Hormuz stuff.
Absolutely.
So I really don't know how that's gonna play out over there. That one to me could be very well one of those forever war type things. Like they have just not come to any agreement. Yeah,
it was pretty important for the euro when it started because of the impact on oil and energy, and especially because Europe tied or kind of broke ties with Russia as far as importing energy. So here in Europe, we got kind of screwed with prices for heating and stuff. So if it does heat up or something happens, it could impact energy, and that could impact the euro. And I actually think the euro will be impacted by the Middle East as well, because energy markets are elevated. Not by much, but they are elevated, which means it's going to take more euros to convert into dollars to then pay for oil and energy for heating, which means they're going to have to sell more euros. That is bearish for the euro as a currency. So that's one thing that I'm looking to do, is sell the euro going into this winter, which I already talked about. I'm just looking, what can I pair the euro with? And the selection is not that great. Like, I don't want to do the euro dollar because I'm bearish on the dollar as well. So I would have to do like euro Aussie or euro CAD, something that could have a bit more punch. Yeah, maybe euro Aussie.
I kind of like euro dollar, and I only say this because I know that currencies, like, they trade in waves and they just chop around. So I don't know. Let's say somehow euro dollar finds its way to 1.18, right? Maybe in this dollar short kind of theme that we're all playing. I feel like if you were to find yourself here and you just start accumulating maybe some euro dollar shorts, might not be a bad idea. It just tends to chop around a lot here. So I think that's very possible. And I think, at that point, you don't know what the outlook's going to be for the dollar. Maybe the dollar starts to pick back up, right? Because I mean, this right here was dollar doing extremely well, hitting it out of the park and every metric possible. Then you had the trader moves, the safe haven, all that stuff, all this right here. But not everything lasts forever. So I think that maybe if you were to see euro dollar hit that 1.18 or even 1.2, that could be a pretty good time or spot to start a short euro dollar campaign. I like that idea.
Okay, maybe even as a hedge against some of the dollar short positions. So you can hedge some risk if you're pretty short on the euro. But yeah, if it does hit that level of resistance, I mean, it's a massive resistance level. That 1.18 round number as well makes a lot of sense. We can get there. Plus the DXY would hit 98, which is my target. Maybe even we go to 95 in a few years. We'll see. I haven't heard of Fallout for a really long time. What's up, Fallout? Are you on vacation or what's happening? So euro dollar, if it hits 1.18, very good short opportunity now that I think about it.
One last thing, Marco, before I pivot out here. Like Bob mentioned, gold is on the move here to the downside. Are you also looking at this retracement level here, 38.2, the 50, or the 61.8? Or are you actually waiting for a bigger retracement, maybe to like 4,200 per se, over here? Like, what's kind of your thought process on gold? Like, are you watching it? Are you like looking to get into it on the the first pullback that comes, or are you more patient with it?
I would get in with smaller size near the 200 SMA. I think so, near 0.5. I think that could be a good entry level, and then add more if it goes down a bit more, or if bonds do something. So if bonds can actually break some key levels to the upside or downside, preferably to the downside, because that makes gold more attractive and kind of works in favor of the debasement trade. So if bonds do something, gold is going to become even more attractive. For now, I do want to participate just because I'm short on the dollar, and this is a good play to do it. So 0.5 makes sense as the initial entry. Yep.
I like that level too. And to your point there, I would be going in with lower size just because we are higher on price than what I was originally here at 4,000. So I'm going to have to dial that risk back just a little bit too, especially because I have other, short dollar positions as well. So I'm just adding to my correlation of being short the dollar. So I'm have to be wise with my risk positions here. But yeah, I'm looking at the same level, man. Just want to get your thoughts on that. With that, and yeah, man, I'll leave you to your solo segment, man. Thank you for the conversation.
Thank you as well. And I just want to finish up with this. So exactly what Alan said. If you guys are running 4 positions that are short on the dollar, trust me, your correlation is really, really high. So you have to tailor the risk with that. The dollar is like the most powerful thing in the markets, and everything follows it. So yeah, dial down the risk if you want to slap on more short dollar exposure. Thank you, Alan. I'll see you tomorrow, and let's see if Jackson Hole does anything, or let's see if the schedule makes any sense.
Yeah, man, for sure. I can't believe it's already Thursday. I feel like the week has flown by. Like tomorrow's already Friday. That's crazy, man. But I'll see you tomorrow.
I'll see you tomorrow as well. Goodbye.
Peace.
So let's take a look at the stock market. Stock market. Stocks opened up. The SPY is up. The Qs are up. Looking pretty constructive there. Probably on the back of Nvidia. Right. Also, let me just set up the one host and let's do the Ola Prime. Okay, that's it. Add my screen. Okay. So the SPY looks pretty constructive. The Qs looking pretty good as well. On the back, as I mentioned, on the back of Nvidia, but I didn't have my screen opened up. I think I saw RVMD as being a nice breakout to buy. Yeah, the relative volume is pretty high. This is not that bad. How many days is the consolidation? 6 days. I don't know, maybe I would like a bit of a longer consolidation there on RVMD, but the relative volume is definitely pretty good. Let's just go to the replay. So relative volume is something that I've recently started to implement. Let's go to the 30-minute. See the open. Okay. Want to go to the 15-minute. And then let's see the opening candle. The relative volume, 469%. That's pretty good. That tells you that there's a lot of, well, basically institutions, big money kicking in. Yeah, filling up nicely. Even this candle is good volume. So volume is something I've started to add into my analysis. BMNR, I'm in a short position here. This is a completely different strategy, but looks like I'm going to get stopped out on this one. VLO is running nice profit. PSNL looking pretty constructive as well. So yeah, I'm trailing the stop loss on these two. Again, this is a different strategy, so I'm not going to comment on it much. But this is the watch list where I look for more breakouts. So far, nothing is really setting up. Like V has gone too far, so I can't chase this. It's a nice breakout for sure, but it has gone too far. NTNX gone too far, I would say as well. NAVN, woo, it's actually pretty good. NAVN, not bad at all. Not bad at all. Nice consolidation. Bashi says you're doing stocks now. Yeah, because like stocks are active at the moment. Rest of the market is pretty slow, pretty boring. So stocks are where the volatility is at. Now, of course, I'm still doing my main thing, which I mainly talked about on my first segment. So I'm doing 2 segments per day, if you're wondering. So I'm in the Aussie dollar, which is doing pretty well. I'm looking for shorts on USD CAD, looking to buy gold on pullbacks. So I'm active as usual on my other stuff, but I'm adding stocks because stocks seem to be doing pretty well. Let me just check the relative volume on this one. If we go to replay, start new, we go to 30 minutes. Let's see the relative volume. Nah, it keeps replaying the wrong bar. God damn. On this one, then go to the daily. Yeah, this is pretty good relative volume, pretty high relative volume. You want the volume to be high on the breakout. Makes a lot of sense because I took a lot of fake outs, basically got stopped out a lot. Wanted to try another filter so that I don't have a million setups to take every week. And volume is a pretty good filter, let me tell you. So let me run through the list some more. Frog, not bad. Not bad for Frog, although it's pretty far away here. Let's look at the ATR. It's kind of running away from me. Oh, crap. wait, I have to turn this off, I believe. Turn this on. What is it? 5.72. The stop loss on this one will probably be massive. Yeah, we can't do this. I don't know. I'll look at it. So Frog is breaking out. FIVN, Owl. Not that bad either. Hinge. Well, this is actually pretty good as well. Nice relative volume. Just put this back. Here, TIC, no, not so great. Anyway, so looks like after my session, I'll have a couple of things to add to my trades. This is still in forward testing though, so you won't find these trades in the A1 Discord. I still want to test things out. I want to see if everything is working out as it should be, and that the performance is good. Then I can start to put in these ideas in the actual Discord. So the main thing is that the SPY is again above the 50, 20, and the 10 EMA. So the main kind of condition to take positions on individual stocks, to take stock breakouts, you need to have the SPY be in a clear uptrend. You need the SPY to be above the 50, 20, and the 10 EMA. Then it's game on. Now the bad thing about this is most prop firms don't have a lot of stocks to trade, like FTMO, Ola Prime, I think, Darwin X, 5%ers. There's basically none. So you have to do this on personal capital, which I know is a bit of an issue, right? But hey, for me it makes sense. I have an okay personal account, so for me it makes sense to try and build it up a bit more, get some more alpha through buying these breakouts. What's that indicator? This one. If you're wondering what this one is, it is I think it's this one. Or this one. Swing data, ADR percentage, RVol, PVol. Yeah, from JFS Rev. I think that's the one. And this one is pretty good as well. That's for the volume. I do want to mention now the sponsor of today's video. So if you're looking to get funded, do take a look at Ola Prime. So Ola Prime, you can get 20% off with A1 Live. Okay, so the link is in the description. Do take a look at their Trustpilot. Always, whatever you buy in this niche, in the trading niche, you need to look at the reviews, you need to look at the Trustpilot. Very, very important. What I like about them as well is there's no consistency rule. So you can say they are swing trader friendly. If you have dealt with this rule, you know it's very tough to get a payout with it. So Ola Prime not having it is a big, big plus. And you get a pretty good price as well with code A1 Live. You get 20% off. Just wanted to mention that since they are the sponsor of the show. How long have you been into stocks? A couple of months. Still forward testing, back testing as well. Seeing what else can I add to try and filter, because like I've taken a lot of setups on stocks. And it's been going well. Nothing crazy in terms of profitability, but it's been going nice. Like the last two positions I'm holding are pretty healthy, but I'm just taking too much. So I need another filter to add to my stock picking to try and increase the win rate, first thing. Second, decrease the amount of setups, because I don't want to focus just on stocks. I don't want to only trade stocks. I also want to trade gold, Bitcoin, Forex, oil as well, everything pretty much. A little bit of everything. And what is good also is that not everything will be moving at the same time. So right now, Forex is pretty boring. Like it's not doing much. You can't really invent volatility. You have to wait for it. So the volatility, the money, the capital seems to be in stocks at the moment. Market ignoring Japan fundamentals. I'm sick of this. Yeah, kind of. How do you see the difference from stocks to Forex in terms of market structure and stuff? Similar or not? Different. They have a positive bias, so they move up over time. Which means if you're a buyer, you automatically have an extra edge in your favor. So it's not that tough to make money in a bull market. You know, pretty much everyone can make money in a bull market. The difference between a winning trader and a losing trader is they both make money in the bull market, but the losing trader loses all of the profits in a bear market or in a sideways market. The winning trader can identify a bull market from a bear market from a sideways market. That's the main thing. Segments are great stuff. Keep up the great work. Thank you very much. I can trade Forex indices and metals, so be nice to go into stocks. Well, do take a look, read the latest Market Wizards. Like, I've read the latest Market Wizards book. It was a big inspiration to try to go into stocks and expand my approach a bit, because there's a lot of alpha in it, and it's not a lot of extra work. Like, yes, initially with forward testing and back testing, it's a lot of work, but once you get the hang of it, once you build a watch list once per week, it's maybe 1 hour extra per day with execution, journaling, and maybe a bit of forward testing, back testing. So yeah. Anyway, I have reached the end of my segment. Thank you guys very much for watching. You can catch me again tomorrow. I'll be doing 2 segments per day. Do not go anywhere. Tiger is coming on in 30 seconds. And yeah, I wish you good luck. See you tomorrow.
If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by 1-step and 2-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size, and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare 2 firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
What's going on, everybody? Happy Thursday. Hope you're all doing wonderful today. This is what 44 looks like, so to give you something to look forward to. I don't know if that's a good thing or a bad thing, but hey, I'm going to enjoy my day regardless. So tell me what you guys are looking at out there. Yeah, my sound's working good, right? Okay, good deal. Just making sure. I'm still having a bad habit of starting my streams in the morning without turning my volume on my microphone. So I basically get everything ironed out by the time I get to you guys. Good deal. Well, what have we got going on today? Oh, hey, I got my phone back. So quick story on that. I went to a restaurant 2 Saturdays ago. It was stolen and I didn't know it because I thought it was in my cargo shorts pocket. And I didn't even know it until the next morning because I'm not on my phone all the time. I barely even use the dang thing unless I'm at the pool listening to music on my speaker. That's about it. So anyway, yeah, long story short, they used surveillance camera to find it. They tracked the kid down. I got my phone back. I think he might get a misdemeanor for theft, but I tried to tell the police, take it easy on him. Let's scare him a little bit, but they insisted. So I'm like, okay, whatever. As long as it's not a felony. But hey, guys, at the end of the day, good things happen. Stay positive out there and be careful with your cell phones when you set them down, especially when they're brand new. They are hot tickets. All right, guys. I did get in that dollar CAD short. I mapped out for you guys yesterday. So we finally did break down below that 1 hour candle I was talking about. And it finally got me in that short. That was a sell stop, remember? So I was talking about that yesterday. It kind of dilly-dallied sideways for the rest of the day, the rest of the night, all the way through London. And then we come into our session, wherever my sessions chart is. There we go. Yeah, there you go. We started to get that decline. So we're in line with the top setups. Remember, that's given us a nice bearish score of -8, very bearish -8. And we're just going to go ahead and profit the green line down here. Remember, I showed you guys yesterday these two demand zones that I feel like are going to be fairly weak just because of the lack of volume, the lack of conviction upon their creations. Down here is really where that volume started to step in on this yellow, or on this yellow candle for the VSA, but green for the expanded range candle on the way up. So gonna definitely not want to flirt with that. I'm just gonna take my profits down here. So we'll let that sucker do its thing, and we'll go from there. So that's the one short that I'm in right now. And other than that, I'll open it up to the floor for you guys. Thanks, Martian Prince. Appreciate you. Appreciate you. Yeah, guys, let me know what tickers you're looking at. Let's see here. As far as top setups, yeah, pretty well silver and gold. So silver and gold are still heavily long on the retail side, guys. I definitely agree with what Nick's been talking about of late when it comes to gold and silver. They're just too. It just needs to flip. Okay, here's our silver. This is about the closest one, but even this is still on the bullish side. So really would like to see price on the volume side of things, the net options volume, start giving me some red bars just like this down here that we had previously at the I should say the middle part of June, it looks like. And gold looks even worse. If we flip over to here, it's well, not much worse, but it's still heavily long, guys, on the volume. So on the call volume. And then when we look at our put to call ratio, rather, you can see silver, there you go, high call volume. Gold is looking a little bit worse than even that because it's below the blue line. So quite a lot of retail call volume out there. Really, I would really like to see prices start to drop on their own. Maybe the smart money, the banks and institutions start dropping it. When they start dropping price, that's what's going to be kind of the trigger to start shaking out the weak hands, as you guys hear people often say. Push prices down, shake out the weak longs, and then when those call volumes start flipping more to the higher put side of things, then that's where my demand zones are going to start looking a lot more attractive. Okay. They look attractive as they are just because of the high scores, the negative US dollar data, et cetera, et cetera, et cetera, et cetera, et cetera. And not to mention the trends, the seasonality for the month of August, which is just about over. And we'll have to reevaluate the seasonality as far as September when it gets here. But that's really the only thing lacking is the big, ugly red crowd sentiment bar on gold, and really the same thing for silver, especially on the retail side. So, and a silver, I think this last COT report had a 0.75% increase from the smart money, and the gold actually had like a 0.25% decline. So it's just not strong enough of a COT signal. Obviously, we get that updated COT report tomorrow to see if they did load up on gold or silver a little more. That would obviously help. But yeah, really, it's all about the retail sentiment, guys. That's really what I'm after. Just let's start selling off some of the weak hands out there, and we'll be good to go. We have thinned out our list quite a bit, guys. We've lost quite a few of the plus fours, the minus fours. We're down to a little bit more manageable of a list as far as I'm concerned. So dollar Swiss, dollar CAD, it's really the only two shorts. Dollar Swiss is still a little ways away from the supply zone that I'm watching personally. Talking about this zone structure up here, go back to my daily, and you can see kind of where it all started from. Daily, big, lovely gap out. And yeah, that's kind of where the basis is. Now, the only red flag is the fact that the daily candle didn't really have the greatest volume, and it bounced into the daily demand at the bottom. So that could potentially make this a little bit of a weaker supply. Okay, just a little bit. But I love the structure. I love the big gap. And when you drop it to a 4-hour chart, now you can start to see this first leg out where we did get a little bit of above average volume, followed by obviously the ultra high volume bar, which is the one that we're currently bouncing into. So I don't know if we were to drill a little deeper into that particular candle, is there anything in this area that it's reacting to? Let's go down to a 15. I don't see anything. I think it's pretty well a waterfall to the downside. Yeah. So yeah, I'm not interested in any of this. I don't have any green candles as far as a pullback, a basing structure to reliably go on for a small time frame supply zone. And not to mention, I'm on a small time frame, 15. So how noisy does it get down here? It gets quite noisy, guys. And this is why I'm waiting for the higher time frame zone structure a little higher for dollar Swiss. But hey, I'm in dollar CAD at this point, so I'm not really that interested in dollar Swiss anymore. I don't want to double up my risk on any one currency. And when it comes to this dollar CAD trade, guys, I actually put in my full position. Okay. So again, guys, I'm very, very, very conservative on my risk. Everybody has their own risk tolerance. Last thing I want to do is blow my accounts on a few bad trades. So for me, at least right now, I'm starting off really small. So started off at a 0.2%. I rose it to a 0.3% as far as amount of my total balance I'm risking per trade. This particular trade is a 0.5%. Okay. So this is the high end for me. And I did it because of all the reasons I listed off yesterday. Obviously, bearish score on the top setups, lower lows, lower highs on all the time frames. My 8 EMA is in line with my 21 as far as down on the daily. The 4 hour and the 1 hour were both giving me the 50 EMA below the 200, like you see here. So that was all looking good. I did get a retracement on my RSI all the way up to the overbought area, which is the only time I care about overbought and oversold on RSI, is if it can give me just a little bit more of a filter after everything else I listed previously is working. So I think that's about it. And then, yeah, the volume coming out was pretty decent, was okay volume on some of these smaller time frames. Not to mention zone on top of a zone, daily 4 hour supply itself, and then a stop loss above, take profit here. So I like everything about this trade, guys. Now, if I turn around and get a small loss out of it, not a big deal. Okay. The best trading strategies in the world have losses. So keep that in mind. But hey, I felt good enough about this to where I would load up on my what I consider my full position, which is 0.5%. Okay. Looking at some of these other major pairs, pound dollar is actually getting close. So this one's getting close. So yesterday I told you guys that I would really like to see this thing start to base out. And I drew up a picture similar to this a little further to the left. Well, we finally got a little bit of that contraction. And then I think what we're seeing now is our first expansion leg out. Might be easier to see on a 1 hour. Yeah, here we go. So contraction. This is buyers and sellers agreeing on price. Remember, for all these buyers and sellers in this area, they're putting stop losses above and below the range, right? So the buyers are putting their stop losses relatively in this area, okay, give or take the size of this. We don't exactly know. Point is, there's liquidity down there. Same thing up here. The short sellers that are trying to push price down and going nowhere, they've got their stop losses up here, which are buy orders. So what I think we're seeing right now on pound dollar is the fact that when we had our first expansion leg out, we tested this liquidity, price pushes around, and now we're testing this liquidity. So now I would expect another decline, just like the bar says, whether it goes a little higher or not. The point is I want to see it now come down and test this liquidity. And when it tests this liquidity, this is where I always say I'm just asking it to go a little further, a little deeper to give me my spring candle. Again, going back to Wyckoff methods, Wyckoff trading methods, give me my spring down into demand where I can now load up on the unfilled orders from the demand zones to hopefully get my trend phase. So it's always contraction, expansion, trend. The trend phase is what I'm trying to make money off of after it bounces into the unfilled orders. Okay. So that's daily. That's 4 hour down here confluence. This one is a 1 hour confluence, but remember, this represents Wednesday's prelude or preview to the bond buyback statement that came out of Treasury Secretary Scott Bessent. Okay. So that is what I'm looking at for pound to dollar. Euro dollar, kind of a similar picture, but it's still got some work to do. So definitely pound dollar is my favorite. I think we lost Aussie dollar and Kiwi dollar. Aussie dollar, by the way, bounced into a zone that I had drawn up on a 30-minute time frame yesterday. So we had this basing structure. We had a nice gap out. That's your acceleration gap, your runway gap, your fair value gap, whatever the hell you want to call it. We had a above average volume VSA bar showing that effort matched result. And then upon its return, we created a little bit of liquidity under here because we just missed the zone. Okay, this was during the middle of the intraday session, right before the lunchtime doldrums yesterday. So what does this do, guys? What does this do? Does this not create some liquidity down here, some sell orders? We didn't quite touch the demand, but when these buyers reversed price up, they put their stop losses somewhere down in this area, right inside of the demand zone. Price dropped in. I didn't take the trade. Well, why the hell didn't I take the trade on this, guys? Any guesses why I didn't take this trade? What time of day was that? Remember, I'm Central Time. What time did that candle hit? What was that 1600 hours? So that's 4 p.m. So that's 5 p.m. New York City time. What happens at 5 p.m.? That's the intraday session crossover, changeover. That's when spreads widen. That's when price goes haywire on zero liquidity almost. It just goes all over the place. Beautiful trade setup, but I ignored it because I don't want to get screwed over by the spreads widening. Okay. I mean, if I would have bought in, let's go get my measuring stick. If I would have bought in on that touch right there, but you got to remember, by the time it fills, it may not fill till up here, somewhere up in this area. 10 pips spread, 15 pip spread, 20 pip spread. I don't know how many pip spread it's going to do. But by the time price fills me, well, now I've got to wait on price to get up to do its thing and just to get me out of the negative. Well, by the time that happens, what happens? Price has now touched my take profit. Right? That would have been my take profit. This would have been the overhead supply zone I would have wanted to take profit out ahead of. Right? This right here would have been my take profit just before the touch. Well, by the time the spread does its thing, I've lost all my profit potential. Does that make sense? Because we don't always know the spread. We generally know the spreads from the bid to the ask, but they just get all crazy. They get volatile, and it's never a good idea to trade, no matter how good a setup we have. Like, that's a beautiful setup, but the spreads, guys. This is why we probably harp on everybody once in a while to say, hey, just be careful when we go from today's trading session to essentially the early part of the Asian session. Okay. So damn it is all I have to say about that. Why couldn't that have dropped in an hour prior or an hour or two after, whenever the spreads went back to normal? But that's trading for you. But the institutions know that. They make a game out of spreads. Okay. They make a game out of those intraday crossovers, whether we like it or not, whether we believe it or not. So sometimes they have the ability to make it drop into those zones, like it did for me yesterday, just to tempt me to break my rules. And I didn't break my rules, and I'm glad for it. Okay. So that's the kind of stuff right there that takes a long time to really get good at, because I used to still buy those. I didn't care. I didn't pay attention. And then I'd wonder why I had a 20 pip spread that basically took me up to my profit target by the time it got me in the trade. What, I profit 1 or 2 or 3 pips? Yeah, that's not worth it, guys. So hope that makes sense on intraday session crossovers or changeovers. Got to be careful with the spreads, guys. And the same thing with anytime those handful of minutes before, during, or after the red folder events that we talk about every single day. The same thing happens. Okay. So that was that. What else have I got for you guys? Jackson Hole starts today. Tomorrow is Kevin Warsh speaking. And as boring as it can be, guys, it's like watching paint dry, watching grass grow. Sometimes they can really come out with some things that move markets. Ben Bernanke, Jay Powell, over the last several meetings have come out with statements that have essentially preluded some some changes that they made. Let me see if I can find the details, because I actually typed in. Let me see if I can find this. Did I do that under my trading assistant setup? I came up with a little bit of a list of some of the big changes that occurred, or some of the statements that these two made, and then things that were changed that moved markets quite a bit. Let me see if I can find this real fast. Okay, here we go. Yeah. Okay. So here you go. Here's a little bit of a timeline, if I can get it the way I want it. Sorry, let me get back to my list here. Here we go. Okay. 2010, Ben Bernanke, talking about long-term security purchases. This was basically the opening shot for quantitative easing 2. Stocks rallied in the months after. Ben Bernanke again talked about Operation Twist. This was 2011, so this is just a few years after the Great Recession. Okay, that was that one. Let me see, which one was I looking at earlier? Here we go. Jay Powell, moving into Jay Powell time frame. basically was talking about some cuts. What happened? S&P dropped 2.5%. So some of these things, here we go, talk about inflation in 2020, talking about Jay Powell again, unveiled the new average inflation targeting framework. Markets barely moved, some small price reactions. So they're not always a big push, a big move. But here's another one. Short, blunt speech, 2022, inflation would bring pain. S&P fell 3.4% that day. So, again, sometimes we can get little hints. It's just like listening to a Fed speech after a Kevin Warsh speech, after a Fed statement, after a rate statement, right? Kind of a similar concept. It can be boring stuff, but sometimes you can find some hidden gems inside of here. So don't worry. That's Friday. That's tomorrow. I'm sure we'll find out what happened, what he opens his lips and flaps about on Friday, and then we can maybe talk about that a little further on Monday. Okay, whenever we come in on Monday. So anyway, just wanted to say that. That's obviously in Jackson Hole, Wyoming. It originated in my backyard. That's the Kansas City Fed that kind of organizes that. But it's a 3-day event, starts today. So happy birthday to me. I get a Jackson Hole symposium. All right. So anyway, let's go back to the charts, guys. Let's see. Aussie dollar, pound dollar, Kiwi dollar. That was another one that fell off the list. Yeah, we did recently bounce into a zone of demand down here, but I just didn't like the structure on this thing. But it's already making a liar out of me. It's gotten a nice push up. It's gotten a higher low, and now it's technically got a little bit of a higher high. But what happens? Bounces into a supply zone. So if somehow it gets back on our bullish list, Kiwi yen, or Kiwi dollar rather, need to break that structure. Just like that. Okay. Break structure, look for a retracement. Maybe we find a new demand zone at that point. It's all about structural breaks, guys, to make sure we're in line with the structures. Higher highs, higher lows, et cetera, et cetera. Shady brokers, yeah. That's true. All right, guys, what else we want? Bitcoin. I'm actually doing a podcast recording today with a crypto trader in Indonesia, I think. I can't remember the country he's in, because of the big spikes up that we've seen on Bitcoin, which basically took place about the same time, guys, and all the other cryptos as well. All the ones I have listed anyway. I'm sure most of them are that way. Again, whenever we had that Wednesday headline, the bond buybacks. I don't know how correlated that is or isn't. That's why I'm going to have a chat with a guy named Yashu later today from a podcast. So talk about crypto. But yeah, we've had quite the spike on all the cryptos lately. There's your Ethereum there, nice spike. Litecoin, Bitcoin Cash, Ripple, Doge. Okay. There's your Sol. Another one I followed, Tau. There's your Trump coin, little spike up, retrace. And then HODL. HODL is your ETF. This is one that I've got a little bit of a eyeball on since I've got a little bit of cash in there. Same thing is true though with HODL, with Bitcoin, with a lot of these. I still need a break. If I'm going to believe this push up, I don't know about you guys. If I'm going to believe this push up, I still need to see a major break of structure, especially when we look at this sucker on a weekly time frame. Remember, uptrend, October, everything descends. We break this structure here, keep going. New lows, new highs all over the place. If we break that structure, well, that obviously gives us a higher high. And then maybe I can cross my eyes sideways and say, maybe this over here is a higher low. Because we have a low point and then it based. It's not quite the structure I like, but this is also a weekly time frame. Because if we look at a daily, it's a little different. Lower low, higher low. Okay. So I need to see this if I'm going to have any interest in looking Bitcoin's way. Something like that. Break the structure. Bullish impulse move. Remember, that's what I'm looking for the higher time frames. So again, we got to not only be satisfied with what we see on a smaller time frame chart, because everything looks pretty nice and bullish when we're down on a 15-minute chart, 30-minute chart, one hour chart. Right? It all changes though when you pull in the higher time frames. So when in doubt, zoom out. You guys hear it a lot. I know we say it periodically here on the show. It's a good idea. Because remember, all the newbies, all the novices are down here on a 5-minute chart, 15-minute chart. And they're going to potentially become liquidity for the banks because of this picture here on the higher time frame. Okay. Same thing with Bitcoin. I'd be interested to see what the put call ratio is for Bitcoin. I haven't even looked at that today. Big spike up, big bullish move. Again, when we look at the smaller time frames, but high call volume. So just like everybody's seeing, okay, big spike up, big push up. That's why everybody's long. That's why their call volume is high. High call volume can potentially become liquidity for the smart money. So what we'd be looking for is a decline on Bitcoin to start shaking out those weak hands. Start encouraging them to take their profits, those that did get lucky and bought this breakout. Or if they started buying up here, well, shake them out. Take their stop losses, push prices back down. Maybe we can get the high call volume to flip over to more high put volume to make it a little more attractive to buy some discounts on Bitcoin. But again, for me personally, it doesn't even start unless we break this swing high. Okay. All right, guys. Gold and silver. Haven't looked at that yet. I know we just talked about the high call volume that all these assets are looking at. I love the structure of gold, though. See, gold and silver is not something I have to worry about like I do for Bitcoin. We've already broken the supply zone. This is good for me, guys. This is good enough for me. Am I breaking a swing low, swing high? Or if a supply or a demand zone is more relevant, am I breaking that? We brought that. We broke that. So supply that got bounced into created a daily flip zone. This is a flip demand zone at the bottom. So really there's two options here on gold, which is one of our bullish assets. We got this middle demand zone, which I would argue is probably in the middle, obviously. If we're looking at our swing low, let's just call this our swing low on this particular period of time. Right? Our daily demand at the bottom is the whole bottom third, basically. So this is my discount. This zone in the middle is equilibrium. Oh, not equilibrium. This is our middle. This is our diddle in the middle territory, the red background, right? Now, it's also a daily demand, which I give a little more credence to versus if this was just a 1 hour demand hanging out in the middle. I got a daily, got a 4 hour confluence. I got a volume bar that's pretty decent on this leg out. That's part of the reason I'm giving this the time of day. Now, whether I get in this trade or not, this would be a partial position for me personally. Down here would be more of a full position. So for me, this might be a 0.2, 0.25% risk. Down here, this would be a 0.5% risk because it's offering a better discount. Right? So I don't really care which. But because it's got such a high score outside of the retail sentiment not helping us out because of all the call volume, I'll still keep an eye on this. If price drops into this area and we still have high call volume, I'm going to skip it. Surely by the time price drops all the way down here, surely that would shake out all the weak hands. Because these traders are in this area. They don't want to start losing all their profits at some point. Hey, at some point, they're going to potentially start taking their profits. Then you're going to start getting shorts pile on because at the end of the day, we do have on a 1 hour chart, which is where a lot of traders are looking, we do have lower lows and lower highs. So this is going to start encouraging breakout traders to the short side. So again, shaking out those weak hands, closing their longs, potentially opening up shorts. So by the time price does get down to one of these demand zone setups, perhaps we can get to a more of a high put volume area for those assets. That's what I'm looking at. It's too expensive, and there's too many regular Joe and Jill traders long this for me, for my taste right now. Diddy in the middle? No, diddle, not Diddy. Not to be confused with Diddy. We're talking diddle. I learned that in my stock trading class way back in the day, and it just stuck to me. So it's just second nature for me to say that. Because that's where, yeah, you're in the middle. Again, there's no discount offered in the middle. And again, it depends on the time frames you look at. But for me, I'm looking at the major structure. So I'm looking at this double bottom over here and obviously the swing high. But we can always go down a smaller time frame. Okay. The smaller time frame traders, well, now what's the middle for that? What's the middle for me may be the discount zone for them because they would be looking at this swing low, the swing high, back to swing low. And now this demand is in the discount. But see, that's too low of a time frame for me, and that's why I stick with the higher time frames. That's why I went to a daily, so I can look at the big picture. Because up in this area, all I care about is shorting. But I can't, if I were to have a reason to short this, which I don't, I would only want to use this upper area for premium, for shorts, or obviously take profits if I were to get long down here. That's just kind of the way it's set up. So anyway, guys, tomorrow, let's see. Yeah, I already covered that. Today, we did obviously have a second week in a row of unemployment claims. Decent numbers. I need to refresh this, actually. So there you go. That's week number 2. 3 weeks ago, we had a miss. Prior to that, I think we had 6 or 7 weeks in a row where we had a bullish outcome. So really, it was just the one kind of bad week, I guess you could call it, 2 weeks ago. But now we're back on the train of good unemployment claims numbers. The dollar itself is still pretty poor when we look at the data as a whole. Again, U.S. economic data over here, still at 30%. There's our unemployment, our jobless claims number, which was already bullish. So again, the percentages didn't change on this thing. And then to finish up, the economic surprise index, nothing has changed. This is where it all starts for me on my dollar CAD short, guys. Dollar is pretty weak. The Canada dollar is the only stronger currency that we have right now among the 8 majors. The 8 majors plus. Okay? Talking about China, South African rand, Turkish lira. That's it. That's the only strong place for economic data, which is who talks about on Bloomberg, on all the financial media. What are they talking about? Inflation, jobs, and growth numbers. Okay. This is why this is my favorite chart to look at before I even look at the top setups, because I want to understand first which currencies are strong, which ones are weak. If I can find a game plan from that, I feel pretty good about being on the right side of the market. So, ladies and gentlemen, I'm getting calls left and right for birthday wishes, so I better start answering them. That's the end of the show. I'm off tomorrow. I won't be back until Monday. I've got a little bit later of a day for my other project. So, thanks a lot for your birthday wishes. I will see you guys on Monday, but show up in the morning, and the guys will take care of you and run it back. See you guys Monday.